moguće. Šta? Šta?
Imaš drugi put šalje poruku, napiši dolazi.
Nemoj, Lucija, ne dolazi.
Guys, mute yourself.
Kaži, šta si?
Nisam, ma on mi šalje.
Znam, samo kažem ono.
Carlo, mute yourself, please.
morning. Good morning. Welcome, everybody. Hope my voice is being heard far and wide into the world. Oh, we got Hey, can you introduce yourself? Everyone can see Chart Addicts over here. Ooh, looks like she's just gonna continue down over here. Let's see here. Ooh, we got a bunch of messages here. All right, welcome. Oh, what's this? Daniel sent a chart. Yeah, Daniel, this looks good. This actually, I was thinking the same thing. You know, our price came down, price made a low at 135.200. Resistance formed, candles bearish. I mean, it just looks great to go down. I mean, theoretically, it should continue down to 135.200. Yeah, but I guess it's got this minor support here, so I think it should go down with the momentum we have right now. Oh, unmute. Oh, okay. All right. You guys can unmute yourselves now.
How are you?
Hey, welcome. How are you, man?
I'm doing lovely. Can you hear me?
Yeah, I can hear you.
All right, perfect. Using my headset microphone today, my Yeti. Currently, it's not working.
Yeah, it's still pretty good. Let's see. I'm not sure if...
So the way I see it is on the higher time frame, it's coming up on that support. So if it starts to create rejections around there, then I see that buy at that resistance. But if it breaks through, it's going to go back inside that consolidation range.
Wait, who is this guy? Can you...
This is Roy.
Roy, man, introduce yourself. So...
yeah, I was on mute before. I appreciate you guys having me. It's Roy from Chart Addicts. I'm excited to be on. These are the best live streams in the world. Best free education that you guys can find anywhere. So excited to be here.
Yeah, this is Chart Addicts. I know you as the podcast guy. Like whoever asked me about you, I'm like, oh yeah, the podcast guy.
We're the coaching guys.
Yeah.
All right. The podcast was just for fun.
Yeah, no, it's really good, man. Like nice, man. Like you took the time to come out here. What's the time over there? Like we're in the same time zones?
Yeah, same exact time zone. 6:37.
6:30. Awesome. How did you start trading?
2017, I was trading cryptocurrencies because I was buying and selling them just for fun, and I had to look at the charts to actually be able to tell what was going to happen. And then one of my friends, Joseph, he was involved in Forex, and he was like, dude, if you're going to be on the charts all the time, you should do this. There's a game plan for it. You can at least build a strategy. Forex was too volatile at the time, so there was no consistent returns. So I was like, okay, I'll try it out. And then 3 years later, I'm here. So it was a lot of losing. It was a lot of learning. It was a lot of self-education. I did a few courses. You guys might have heard of them. I'm not going to trash anybody on this podcast, but didn't do what I needed to do, and then ended up having to get some self-education, and then found a mentor. And that's kind of what changed my life. Once I found my mentor, I was like, okay. Kind of cut a few years off my mind.
Yeah, I think that's really important. Like, I mean, starting on your own is okay, but like if you have a mentor, whoever that is, it kind of like speeds up the process. It really speeds up the process because like when you start, your hands are everywhere, right? You're like, I want to know this, I want to know this, I want to know what he's doing, like everything, you know. But once you get a mentor, then you're like, okay, this guy says, okay, just focus on these few things. All right, I'm just gonna focus on this, you know. But so once you got a mentor, did you find that there was a time where you felt like the progress was really slow?
Yeah. I mean, you know, I went through that. I went through the whole cycle. I went through the cycle of wanting to quit. I was really lucky because a lot of my friends were involved in Forex. Because if they weren't involved, I probably would have quit at some point. Because I was just dumping hundreds and hundreds, sometimes thousands of dollars into trading accounts, blowing the trading account in a short amount of time. You know, I was on the boom bust cycle, so I'd have a good consistent 6 weeks of very hard earned progress, and then 2 or 3 days of just reckless gains. So yeah, so that's kind of like I was on that boom bust cycle for a while. After that, I just kind of, my mentor was just like, he wasn't telling me how to trade. He was just like, stop doing what's not working. And the more I kept cutting off the things that were making me lose money, the more I realized that my wins would outshine my losers. And then eventually that strategy just started to work.
Yeah, that's the hardest thing, when you have to stop doing what's not working. Because in our mind, we see that as, no, you know what? Like, I have to take this trade because this is going to work and I'm going to make money. And it's really hard to let that thinking go. Like, it's really hard to say, yeah, but I'm over trading, but no, it can work. But there's a high reward for this trade. I've seen it happen. What if it doesn't work, right? So yeah, I guess it's really hard just to say, okay, you know what? Maybe I have to just stop right now and maybe come back. I think it's just that waiting for the next time it happens. That's the hardest thing. Like, where you just
It's something you said on the podcast that actually would be a pretty good remedy for this, which is pretty much set parameters for yourself. So I think you have a 3-strike rule, if I'm not mistaken. And so that'll keep traders out of a lot of trouble. And that's something that I wasn't doing. I'd always have this mentality of, if I lost a trade, I'm gonna make it back. I'm not getting off the charts till I make my money back. And that was hurting me a lot. Now I have a 3-strike rule because I trade indices in the mornings. So if I have 2 losses on the indices, I stop trading. If I have a 1 win on the indices, I stop trading. And so these rules keep me in place.
Yeah, no, that's good. That's good. That's what I found too. Like, normally I think when people come to the charts, like, let's say it's a Friday, right? Friday, normally what on Friday we do is we basically like lay back, chill out. Like, I don't really look for trades. People who do look for trades, I'm pretty sure they're very intelligent people, and they really lower down their risks, whenever they do look for a trade. I'm just hypothetically, that's what I'm assuming, right? Not everyone's the same. And yeah, it's the same thing. Like, when people come to a chart on like Tuesday or Wednesday, I think most of the time their first or second trade is always a profitable trade, right? Like the problem happens when you start walking into the third, the fourth, and the fifth trade domain. Like, once you walk into the fourth trade, oh man, like that's the tipping point. I think if you tip off the cliff on the fourth trade, you're going to do the sixth trade, the fifth trade, the sixth, the seventh, and then a time is going to come where you're just going to lay back and say, oh man, like, I've lost a lot today. I shouldn't have really done that.
Wait, so explain that. So what is it about the first, second decisions versus the fourth, fifth, and sixth decisions that makes the first 2 better?
Man, your mind is fresh. You have a fresh mind, right? You have a fresh mind. You come to the charts, your mind is fresh. Maybe you smoked a fresh blunt, whatever you did. You come to the charts, you're just like, okay, you know what? This is, I can just have a good trade. So with a fresh mind, you take a trade. If it's a loss, you've managed your loss. You had a stop loss and you managed that risk. If it's a win, you're like, okay, you know what? This was the perfect trade I had to take, which I took and I won. But once you start walking into the fourth and the fifth, that's when you start thinking about the money emotionally.
Sure.
Right? You start thinking about, oh man, like, because now your mind is like numb to the trading ideas and stuff like. Because I think when you come to the charts and you're taking like an intraday trade, right, like a small 10, 15 pip trade, that takes around 20 minutes maximum, or like a half hour maximum. Right? And like, if you leave it running, that's fine. But like, when you're looking for a third trade or the fourth trade, you're actually putting in more work, mentally. Mentally, you're focused. Maybe you're stressed out. Maybe you've lost the first trade. Now you're going to make that losses back. You're stressed out. Maybe someone gave you money to trade, right? Someone gave you money to trade, and you promised them certain returns, and you're not meeting those returns. Right?
Yeah, I've been there.
Bro, I know a lot of people like that right now who are listening to this, who are in that same boat, and it's not going to work.
That's not a good way to trade. The more that you're thinking about the scoreboard, I think it's like something that Kobe Bryant said. That the more that you're thinking about the scoreboard, the less likely you're focused on the actual game.
That's true.
So nowadays, like, we just tell a lot of our traders to focus on playing the game. Focus on your technical strategy. Focus on your entries, exits, trade management, and the money's going to come in. And that's something that my mentor told me years ago and never clicked. Said, if you focus on the game, the money will come. I was like, I don't know what that means. I thought the game was money. It turns out the game is risk management, technical analysis, and psychological control. and the money just flows in when you do all that stuff right.
Yeah.
So big process.
Yeah, no,
Well,
that's true. So I was looking at the chart here, right? So I was looking at your 4-hour chart on GJ.
Yep.
So you're expecting to buy from 134, like this area here?
Yeah.
Okay.
Basically, the way I see it is like it's very traditional Wyckoff theory, which is that price moves in phases of sideways movements, impulses, sideways movements, moves back down. So basically, the way I saw it was there was like an accumulation phase, price shot out of that shot out of that consolidation zone, and now if it breaks back below that resistance of the consolidation, is going to go back to the bottom of the consolidation. So exactly, yeah. And then there's a bottom support. So if price violates that current resistance, then the likelihood that it goes all the way to the bottom of the range is more likely than the chances that it reverses halfway through.
Yeah, you know, that's funny because I look at things the same way, but I'm not really familiar with Wyckoff theory, but I look at the same way. Like my whole thinking is that you're right. You're absolutely right. If this was a consolidation area right over here, and after price consolidates, if it breaks one way, theoretically it should continue moving that way, right? So it kind of like, let's say it broke out, came down to do a retest, it couldn't break back down, so start to move back up, right? But it came down. But you're right. If it comes down into here, then my thinking is that, okay, if it couldn't maintain its move above consolidation, it has to, like, you know, maybe at least go back down to the bottom of the consolidation, you know, and if it breaks down, then it continuously goes down.
Roger, this is why I love what you do, is because you usually take the abstract and put it more practical. You feel what I'm saying? So you're explaining the actual candlestick formations that you're expecting to form there and step-by-step process. So I think that's really useful. I like that. I just tend to think more in the abstract term, which is like, if price doesn't break the zone, then it's going to keep going. If price does break the zone, it's sort of like a binary absolute, the way I like to trade.
Yeah,
because for me, it's probability. It's like the probability it keeps going down is higher than the probability that it doesn't keep going down. And so I'm going to take the trade with the probability that's in my favor.
Yeah, exactly, right? Like right now, if this 1 hour candle, actually let's look at this 30-minute, right? This 30-minute closes like a weak bearish candle. So right now when I'm looking at it, in my mind, I'm saying that, okay, there's a higher probability price will continue down towards 135, 200, provided if this candle closed like a strong bearish candle. But if it closes like a weak one, then the probability is going to die down a little bit.
I agree.
Right? And then once it starts to form bullish, for me to execute the trade, I'll have to really tell myself, hey, listen, there's a very high probability price will continue to go up if the candle closes bullish. Right? Now, if it becomes a loss, right, I can't turn around and say, no, it doesn't work, because the probability was there. Maybe when I executed in this trade, maybe this was the negative probability. You know, which happens, but it doesn't happen often enough.
Sure. Anybody with real trading history knows that you're going to have to build in losses into your trading system. So it's not about like, okay, I lost this position, like it's a losing trade or whatever it is. Every single trading system, unless you work at Renaissance Technologies, has losses built into the system. And so like you said, if it's just one of those normal losses, then it's fine. The question that I always tell my students to ask is, was the loss justified? Which is, did you make the correct decision, or was there a flaw that you made? If it wasn't any error on your part, then just move on. If it's something you did wrong, you gotta fix it ASAP. But most people, it's usually just judgment errors.
Yeah. So there's this question here. Do you use institutional? Yeah, maybe. Yeah. Do you use the institutional candles, levels, and discount price and fibs with your Wyckoff?
I don't know if I do all that. Basically, I guess by institutional levels, they mean areas of supply and demand. And yes, those are areas where banks like to trade. So banks trade based on a discount and premium level. So if price or if the value of a currency is at a discount, institutional buyers are going to be buying up that currency for their reserves. So if something's cheap, banks buy it up for their reserves. If a currency is overvalued, it's trading at a premium, then institutions are going to let it go because its purchasing power is too strong. So basically, I just look for what are the absolute lows and absolute highs of a specific market. And this is why what Raja is doing by trading the same pair is really important, because you start to familiarize yourself with those institutional levels over time. You know, like the 135, 136 level is very crucial for that level. So if you trade the same pair, like I trade EG, I know the 0.9 and the 0.91 are huge institutional trading levels. Whenever price gets to 0.91, I don't have a second guess in my mind what I'm going to do. I'm going to sell every single time it gets there, which is what we've been doing all week. So if price is low, buy it. If price is high, sell it. That's pretty much as complicated as my trading gets.
Yeah, just to play devil's advocate here, I mean, so you mentioned about the bank levels and the institution levels, right?
Right.
Is there an institution that prints out these levels every week? Like, hey guys, so these are our institution levels.
No, not at all. It's just like discount. It's like if we all go to the shoe store today and Nikes are at $100, and then we go back to the shoe store tomorrow and prices are at $150, I'm going to be really mad I didn't buy them for $100. So it's not because someone is telling me like, hey, 100 is a good price. It's because we all know that when we walked in yesterday, it was cheaper than it was today. So when we all know what the discount price is, we all agree what the discount is, then buying at a discount is always going to be profitable. You're going to buy it for cheaper than what it's worth. So I guess the real game is figuring out what is low and what is high. I think that's where traders get really confused.
Okay. So is that like on the...
If you look at the larger time frames, you can easily tell what's low and what's high.
Oh, like the higher time frames.
Exactly.
All right. Yeah, because in the start, I always had an issue with like, you know, when guys would say, hey, we have these institutional levels. And I'm like, which institution? What's the name of this institution that's telling you, hey, this is our level over here?
Nah, this isn't like the market makers coming to get you. I don't mean it like that. I don't mean it like that. It's just like everybody is kind of in agreement about a certain price level. That's what I mean. At least all the smart money investors agree on what is a discount, and all the dumb money investors agree to buy and sell at the wrong place. And as long as that balance is there, the price is going to move in the direction. You can buy low and sell high.
Yeah, you know what I think? I think that on the higher time frame it works, and like, you know, at times you've seen price reject, like let's say 134 even, right?
Yep.
Or 136 500. You know, we've seen price do that, and whenever price does that, I'm just like, okay, like, you know what? This is just coincidence, because at times we've seen price like, you know, really consolidate at like really important levels too, or like break them as well, like, you know, like 135 even numbers, we saw price like break it. So at that point I was like, maybe there wasn't enough probability for price to respect this level as an important, I'd say, like institutional level.
Yeah. I really don't want to get too complicated into this, but George Soros was one of the most successful Forex traders of all time. He kind of had this theory called reflexivity, which is that it's not because the 134 price level is some magic price level and that's why it's shooting up. It's because we all look at the 134 price level and we're all thinking the same thing. Is somebody else going to buy it here? And because we all think somebody else is going to buy it, we end up buying it. And because we end up buying it, the price ends up reacting at those price levels. So it's a self-fulfilling prophecy. Because the institutional traders believe in those levels, they end up making those levels actually mean something. It's called the theory of reflexivity.
Okay, I think this theory of reflexivity is showing up on GJ at 135 400 to probably continue heading up here.
Yeah,
because
so this I don't want to like fall into that trap too much, but if it breaks above the 500, like 134 500, then I can see it continuing to the upside.
Yeah, 135.
Those quarter zones.
Yeah, it is. I agree with that, because it did break the low, but it broke the low in the early stages of the candle, right? So if in the last minutes of the 30-minute candle now it has broken the previous high, you know, now the probability, like what we were talking about here earlier, now the probability increases for price to continue moving up, because at first what was happening was, so basically what I look at support resistances is like they're very variable. At first we had a resistance right over here because, you know, this candle was bearish, but since this candle, if this candle closes bullish, now you have a support formed, and this is going to be your, like, you know, most recent fresh zone formed. So it's going to support price to continue going up. Let's take a look at this.
Sure.
Got some charts coming in. Okay. Yeah, I believe so. Like, if this candle continues to close bullish, I really think, yeah, it can continue heading up. New Zealand USD. Nice. Are you gonna hold this over the weekend?
I usually don't like to hold trades over the weekend, to be honest, just to avoid swap. Because I know like the way I do it is I also follow institutional market cycles. So like, you know, Sunday, Monday, it's usually directional, like they testing the waters. So buyers test the waters, sellers test the waters. Tuesday, there's a definitive move based on the trend that was established on Monday. And then Fridays are usually the slowest days. So usually Fridays are usually a continuation of the trend that was established on Tuesday and Wednesday. So if the trend at the early part of the week was bullish, then usually Fridays are a continuation, because those same traders are back at their desks. That's like the behind the scenes psychology. It's like those same traders are trading the same commodity or index that week. So while they're at that desk.
Yeah, no, that's right. Also, I would like to remind everybody here that, hey, listen, this is a Friday. If you take one trade, I think that should be more than enough. I'm not taking any trades on a Friday because, you know, sometimes Fridays can be really, really freaky, man. Like, sometimes Friday can walk around the corner with a big dildo and you're like, oh man, what is this? You know, you're expecting price to go one way and Friday's like, aha, where you think you're going.
Yep.
Yeah, so
that's Fridays and Mondays. If I make money early in the week, that's like something that was the last lesson that I learned. One of the latest lesson I learned, not the last. The latest lesson I learned was if you make money early in the week, just stop trading. Because when you finish the week in that profitability, there's nothing that can beat that. And so it's about the self-control. If I make something on Tuesday, not to trade Wednesday and Thursday. I struggled with that for a while. I goddamn love trading.
oh yeah, man, I think that's really important because I think when you really start focusing on one trade a day or two trades a day, you really start enjoying the process, because if you took the one or two trades and they were losses, now you're just studying them to see how you could have taken the winning trade. But if you've taken 7 trades or 8 trades, right, you're not going to look over all those 7, 8 trades, right? You're going to be like, no, man, like, screw that. You know, like, I have things to do. I'm not going to go over my trades. But if you've taken like one trade, like I take like 1 or 2 trades, right? For me, in the afternoon, it's really easy to go over those 1 or 2 trades. I can understand them, I go over them, I get excited about it, you know, that I performed at my optimum level, and this was the result of that, you know. And if that result was below average, like in my mind, if let's say if it's not that good, then try to see that, okay, how could this result been above average for me, right? Or if this was good result, then I start to see, okay, how could I have made this better, right? It's about like I talk about routine all the time, like, you know, like people should have set routines throughout their day, right? Like specific tasks that they have to do every day. You know, my routine is, bro, like I wake up in the morning, I do the streams, you know, after the streams, like I hang around with my son, you know, then go to the gym, I come back from the gym, and then I do like highlights. You know, I do highlights, reviews, and then I spend some family time. After that, I do like agent analysis, you know, and after that I have personal time. So every day, these routines I try to do at the best of my ability every day, you know, including the workout. Like if I do more reps at one day, then I'm like, okay, awesome. You know, I did best reps today. You know, my analysis was better than yesterday. My breakdown was better than yesterday, right? So having routines, I think it's key to have like really optimum success in life.
Dude, I really like that. I really like that. It's like having a routine is, I think we talked about this on the podcast, which is if you're consistent in your real life, it's going to bleed over into trading. The worst thing is that traders try to think that you can become consistent on the charts, but leave the rest of your life on the side. So you can have temperament issues, you can have, you know, lack of self-control when it comes to substance use and all this other crap that's on the side. But when you go on the charts, you want to be responsible, consistent, and disciplined. And then what I realize is when you get your life in check and you become a disciplined person and you become a consistent person in your decision making, then it just bleeds over into the charts. So
yeah, exactly, because like, you know, if you have set things to do in the day, then you don't have time to look at the charts, you know. And if
Exactly.
you don't have time to look at the charts, you're not trying to trade, you know, because like sometimes in the afternoon, like I know guys here, like, you know, like even myself when I first started, like you know, we'd go to a grocery store at 2 p.m., you know, grocery store, checking out some avocados or cucumbers, whatever, and there you are, you pull the phone out, you look at the charts, you're like, hey Henny, here's the card, pay for this shit, I'm gonna go look at this trade right now, You know, and you start analyzing the trade. You're like, oh, it's got the wick fill. It's got the wick fill. I gotta get this wick fill. I'm gonna take a buy right now. You know, and it doesn't work, man. Most
It
times it
doesn't.
doesn't work. And
It's
then
a
you're
headache.
like, why isn't it working?
Um,
Yeah.
so I have a question at Chart Addicts. How did you put emotions to the side and don't care about what's possible? So this is something that I also struggle with. Is I always used to hear about the emotional side of trading, and I'd be like, okay, I gotta be unemotional on the charts. Guys, we're still human, right? Unless you're gonna become a sociopath or a psychopath overnight, you're gonna have emotions. Your job is to find a trading strategy that is compatible with your emotional makeup. So if you are a nervous person, you want to find a strategy that causes you the least amount of stress. If you are a high aggressive person, you want to take advantage of that and find trades that are high aggression, high risk, and high probability. So you're not trying to put your emotions to the side. You're trying to understand your emotional makeup. You're trying to make a plan based on that. So make sure that you guys are doing that. If you guys look at Raja, and Raja's a scalper, and he's a decisive person. So when he makes a decision, he's sticking with his decision. If you don't have the same makeup, you can't really trade like Raja. You see what I'm saying? So what you can do is you can emulate the technical analysis that Raja's teaching, but maybe the entries, you're going to have to do something that's more comfortable for you. So basically just know yourself and stop trying to copy everybody else.
We have a question here. How much move in price is enough for institutions to say that this is a high or low level? Now we have to leave or start investing now in that currency.
Yeah, it's not about how much it moves. It's about where it is relative to the price. So you can just look at the higher time frame and know what's low and what's high. That's one of the first things that you learn in trading. Once you go on the higher time frame, Ted said this on a podcast, the way he phrased it was really important, is you have more margin for error on the higher time frame. So some things that don't change is the high and lows are going to be established price levels on the higher time frame, and then you have margin of error to understand what's happening within that price range. So yeah, go on the higher time frame, mark up your absolute low, absolute high, and start to find zones in between the absolute high and low that coincide with price action, support and resistance.
Okay, let's try to do this here. Let's take a look at the weekly here. So, are you looking at the highs over here or the weekly candle itself?
The very first thing that I do is I would draw the absolute low, absolute high, and then I actually developed something like I've been finding something observationally is that there's always a middle zone, which I've been calling the neutrality zone, in between your support resistance. So if you drew the absolute low at like 128 and the absolute high at 142, right in the middle in between that support resistance is going to be a neutrality zone. And that's usually where I start. I do trend and then absolute low, absolute high, and then go from there.
All right, so we got 148, and then we got the bottom right over here.
Yeah.
124, and then we obviously we have zones in the middle over here.
Yep. So it should be like right around the 50%.
Almost right here.
Yep. All right. So then you have support, resistance, and neutrality. Neutrality means that neither bulls or bears own that zone. So if price is above neutrality, that means that dumb money is buying, smart money is starting to take money off the table. Like, okay, so the way I can describe this is smart money buys below the neutrality zone. Dumb money buys above the neutrality zone. Smart money sells above the neutrality zone. Dumb money sells under the neutrality zone.
See, how I look at this is like you're right. So let's say we have resistance, we have support, right? If price is at the bottom, it has a higher probability to go up, right?
Sure.
If price is at resistance here, right here, it has a higher probability like to go down.
Facts.
But once price reaches in the middle over here, it has a 50-50 chance whether it can go up or down.
Yeah. Well, that depends. So the probability is on which side that the price is reaching. So if price is reaching from the bottom and it creates multiple rejections, the probability is going to come down is higher. So now you have a high probability trade in the middle where you don't have to put your stop loss at the absolute high. You can put your stop loss above that neutrality zone wick and take a sell to the downside back to the bottom of the range. So you can always pretty much find a trade based on if it's forming resistance or support and which side it's attacking that neutrality zone. So right now it kind of looks bearish to me.
Yeah, exactly, because it's beneath that, like on the higher time frame.
Exactly, but it's still making a higher high. Like this is where you start to use different strategies within each other. If you go to the 1 hour, you can see an Elliott wave forming. So it's kind of like it had like the first leg, the second leg, or I think it'd be the 4 hour actually.
Ooh, now we're opening up the science box over here.
Yeah, it would just be like there was like a first bullish impulse, then there was that retracement, and then there's another bullish impulse, and now price is on another retracement. So I can actually send you a markup that might make things easier.
Yeah, this GJ, as long as GJ 30-minute candle respects the low of the previous 30-minute candle, if it respects 135.300, we should get 135.700. That's
We also had a support being created here on the 1 hour as well at 135.283. I don't know if you noticed that.
283. Oh, right. Oh, right there, right?
Yeah, on the 1 hour. Look at the 1 hour chart.
1 hour chart. Right at this level.
Yeah.
Yeah. Yeah. On the 30-minute also candles closed above like 135.400 area, so yeah, it makes sense. Should continue moving up.
Yeah, I got slapped on myself. I closed a third of a loss, so I'm good. So I'm giving the second try.
Bro, you having a headache?
I still got stopped at break even.
Yeah, I got stopped at break even.
Man,
not
looks like you're
overtrading.
getting a headache, man.
No, it's like my head hurts.
We should break this minor resistance
Let
on
me go get my
on the 1 hour.
glasses because this is giving me a headache.
Okay, yeah, this bounce here.
Yeah, it's
Yeah.
only if it respects. So it's all conditional. If it respects that support and creates multiple rejections, or on the higher time frame creates a wick rejection, then the probability of it continuing is going to be higher.
So, how many pips like do you usually go for? Like, what's your aim? Like when you take a trade?
For currencies, I usually swing, and for SPX, I usually scalp. So when I'm scalping SPX in the mornings, I'll go for 100 to 250 pairs or 250 pips. If I'm trading a currency pair, I'll go for like 100 to 150.
Okay.
I'll be taking partials periodically.
Yeah. Yeah. Plus, also it depends on the market structure too. Like if there's
Of course.
enough room for price to actually go there or not. Yeah.
For sure. The thing is, I have a strategy where I always take partial profits, protect my trade, and I leave a runner. And so when you leave a runner, what I start to find out is the longer you leave a trade running without interfering with the trade, it tends to just keep going to the last highs or lows of the previous session. So as long as I got out of my own way and just held the trade, the runner usually made more money than the partials I took off. And that was one of the biggest revelations for me to find out I need to hold my trades, or at least hold a partial position. Because I agree with what we were talking about on the podcast, Raja, was you got to walk away with some money. You got to get paid for your work. But at the same time, if you leave a runner, sometimes that thing will surprise you. Sometimes you'll have some crazy news days and you'll wake up and you'll see that your runner is doing more work for you than your actual position did.
Yeah, I know that's true. Oh, what's this? This one's for Daniel. Can you tell me if the Fibo is good here? Happy face.
Fib.
No. Invalid.
Invalid. Perfect.
Why is it invalid?
Yeah.
Because he's putting a smaller time frame short Fibonacci on a higher time frame fib that's already in play.
Wait. What was that again?
He's trading one time frame against the other.
Talk that talk.
So basically, if you look on the daily, actually, well, besides the beautiful daily resistance, well, previous resistance, now support at 135.296. Notice how we had one retest July 22nd, and now we came for our second retest today. It's also respecting one of my 8 SMAs. But look on the 4 hour as well. It's also a strong little level of resistance that was retested as well. And price right now currently on the 1 hour did make that level of support at 135.284. So working my way down again on smaller time frames. Another level of support was created on the 30-minute at 135.412. So price, well, I already have a buy stop in place, right, at 135.518, like I sent through in the chat earlier. But I'd be looking for my first target at exactly 135.640 as my first target at my 1-to-1, 11 pips in profit. And then I will most likely target, if we are still very bullish, most likely 136 by New York push. Will probably, if we can at least stay above 135.630, 650, then I do believe we will most likely see 13600 by the end of the day, if not the second New York pushes.
Yeah, that's what we were talking about yesterday too. I mean, now when we look on the 4-hour, if price is rejecting a 4-hour zone and it's also rejecting a daily zone, then it should, and if it's really rejecting it, it should break above this minor 15-minute and the 30-minute zone right here, which it is. And it's something that happened yesterday too. We rejected 136,600 and then we broke below a minor zone. So it's like, now this is the opposite way. We're rejecting a high time frame and potentially we're going to break this area and go towards, like a little bit higher. 135, 800, etc.
Done for the days, fella.
I'm actually waiting for a close above 600, and I'll probably take a second entry, ride it up to 700.
This is my one trade for the morning.
This entire candle was like a nice 14 pip move.
Yeah, I'm still in it.
I don't think he's going to answer. Oh no, like you have to ask a question. I like the scalping strategies. They work well if done right. I just don't understand all these ICT style claims about that's something I struggle with a lot too. Like, when people would talk about institutional levels and how, like, okay, so when we talk about institutional levels, right, do we really know how, like, when guys say, hey, like, we can teach you about how banks trade, is that really a thing, or is that just like a concept on the charts?
No, it's just an observational tool. Like if you look at the chart and you see that there's a multiple rejection area at a price that has been established as a low, that is technically an institutional level, because retail trading volume is 6% of the market. If price all of a sudden makes a U-turn at a specific level, it wasn't one of us making that price movement. So by default, it was an institution, and that's what we refer to as an institutional price level. It's like none of us have the money to just make the price turn at 0.91 on EG every single time, because it's just like banks. What they're doing is they're buying and selling reserves for their own strategic reserves, and they want to make a trade. They want to make a business decision at the most favorable exchange rate for themselves, and so they're going to buy the euro at the absolute low because that's going to be the most favorable for them to make a trade deal. And that's kind of how they think about it: is what is the value and the purchasing power of the currency? If it's low, I'm going to buy it. If it's high, I'm going to sell it. So by looking at the higher time frame, you can just see what they've established as low and high. I promise you, I'm not making up these levels, and I'm not saying that there's somebody behind the screen watching it, and every time it gets there, they're pressing. It's usually in terms of like day orders or limit orders, where an institution will have it at the discount and premium prices, buy limits and sell limits in order to execute huge liquidity moves at those levels.
And what are these levels again?
These are levels, like if you look at the 4-hour chart, you can usually see them as the highs and lows, and then everywhere that there's a support and resistance, where support becomes resistance. So it's like changes of trend and areas of neutrality where where bulls and bears kind of conflict. That's usually where you'll tend to find institutional levels. Where we are right now on the higher time frame is considered an institutional level, because there's no reason why in such a aggressively bearish trend that price just turns around all of a sudden, except for the fact that there is a lot of buying pressure at a discount price. Does that make sense?
Yeah, it makes sense.
Yeah, I don't want to overcomplicate trading because I don't think about this stuff when I'm trading. I look at it, I see high and low, and I see if it broke the low, I'm trading it up. But when you're conceptualizing it, it's important to understand and have like a real articulate reason for why you're trading those levels.
So it's basically, Roger, like he's saying, basically like how you're saying, if price bounces off a higher time frame support or resistance, then it should continue to go in either direction. Basically, same thing. Correct?
Yep. That's exactly it. And if volume isn't there for the big orders, they need to execute orders at that level multiple times as price retraces to it. Yep. Well, they actually, this is going to get a little bit complicated into the actually how they execute orders. But basically, they do scale in, they do scale out. They might push the price higher. So you guys see when I'm trading like that consolidation, and there's a slight push to one side, and then there's a liquidity move to the downside. They are pushing price a little bit higher. So the same person might bid the price higher, just so they can get a more favorable sell. And then they might sell there, and then the rest of the market will do their job for them. So they'll bid price higher, sell at a premium, and then as the price liquidates, they can make money on their order. because yeah, I'm not gonna go too deep into the institutional side, but basically like they're not trading Forex. They're just Deutsche Bank is trying to send some money over to an American company and they have to buy euros in the transaction. They don't want to buy euros at an expensive price. So what they do is they just wait until the price is favorable for them. And then, that's usually the same price level that we see a low on the chart.
Yeah, exactly. Like I think there's a big misconception that they're sitting there staring at the 15-minute candles and the 30-minute charts, and no, man,
that's not happening at all. What I call this business as usual. So they have a standard operating procedure. They move money around. This is why like all this talk about like the market, like the victimization of traders being like, oh, the market did this. Oh, I don't trade UJ. It did me dirty. I don't trade this. Like these pairs just move. They're just doing business as usual. That's how they make money. They have a standard operating procedure. It's our job to find indiscrepancies, like to find out where they're fucking up and to take advantage of those fuck ups. Right? And it's getting harder to find those fuck ups in the market because they're making markets more efficient. But this live stream is a perfect example. You can always find an edge. Always.
Yeah, I know that's true.
And what do you mean by, sorry, Roger, what do you mean by making market more efficient?
So what they do is in markets where, let's say like the banks don't want a lot of volatility in the markets, what they'll do is they'll create a lot of artificial volatility to kick out trading, to entice traders to move on somewhere else. So for example, the Bitcoin market, if the institutions want to get in the Bitcoin market, they're going to have to create so much volatility that it kicks out the traders, that it's just not favorable for us to trade anymore. Once those conditions are there, then we can, then the institutions can use it to do business as usual. If there's too much volatility, institutions can't use it. So basically they just make it unfavorable because right now it's like a day trading ghetto. That's what Bitcoin is. You have to get it out of the day trade. You have to put some light on the ghetto, get everything out and then start from scratch.
Yeah, I know that's true. You're right. Bitcoin is the day trading ghetto. I mean,
but it won't be for long. It won't be for long. Like once JP Morgan, if they really wanted to get in, they'll just keep creating daily volatility in forms of wicks, just buying and selling at the same price level. Then all of us are going to be like, dude, I don't want to put a 300 pip stop loss just to take this trade. We can see this on oil and gold happening, where there was a lot of liquidity issues trading those pairs. Now all of a sudden they've made it harder to trade those pairs.
That's not true.
Oh, actually, gold right now is
That's not what happened.
The spreads are being lowered. Like if you've noticed, I've noticed last week, I was getting maybe 8-9 pips. Actually getting 4. I can see the first trade on gold last week since it's been 4 months already.
Exactly, Mac. He's basically saying they kicked us out for 4 months. Now they're letting us back in.
Yeah, basically, exactly. Yeah, that sounds like you're in the VIP. You get kicked out.
Yeah. It was just this coronavirus situation, because all gloves were off, and it really became a battle for these institutions to position themselves and to brace for this current situation. So the printing of the dollar messed up the price of gold and oil. And then now that institutions realized they're going to keep printing dollars, they had to make a strategic plan for how to make gold a real investment and how to make oil a stable market. So oil, I actually used to trade daily, and I realized that my risk just had to keep getting bigger and bigger to take those trades until I eventually just got kicked out of my own market because it just no longer was compatible with my strategy.
Why did printing the US dollar ruin oil?
Oh, wait. So this is Jeevan. Jeevan, you gotta introduce yourself.
Yeah, why did printing the US dollar make gold a bad investment? Low interest rates and low global yields
I didn't say make gold a bad investment. I said the printing of the US dollar affected oil and gold respectively, because gold is priced in US dollars and oil is sold in the euro dollar market. So everything is pretty much priced in dollars. So having a strategic oil reserve is like another way of saying you have a whole bunch of dollars in your bank. But the rate that you can exchange the oil for dollars changes. So if the price of oil crashes, you thought you had $100 in the bank, now you have 87. And so what it's doing is it's reducing the purchasing power of these countries. They started getting rid of oil to get US dollars. So now there's like a fight for US dollars. As the fight for US dollar continues, right now US dollar is on a bit of a decline. So you're going to see
if there's a fight for the US dollar, why
once the demand comes back to the market.
Pull up a US dollar, pull up the Dixie chart on the daily. The dollar index chart on the daily.
Yeah, it should be at 95, and it should still be bearish. And my target is 93.
So if you're telling me right now the US dollar is heavily in demand right now.
Yes.
Where?
It's coming. Trust me, it's coming. What's happening is if you're gonna print $1 trillion, there's gonna be too much supply in the market for there to be any demand. After a while, the entire world.
Right now, the U.S. dollar is heavily in demand, but where?
70% of the global trade is denominated in U.S. dollars. So
I understand that. That's why it's the world's reserve currency.
If they're going to print $1 trillion of something in the short term, there's going to be a liquidity release because you're going to see $1 trillion of free money. You're going to sell all U.S. dollar denominated assets and start getting dollars. In a few months, once everyone realizes we all need dollars to survive, the euro dollar market means any dollars that's not in the United States. The whole world, 70% of global trade needs dollars to survive. So what's going to end up happening is that demand is going to come back into the market, and the dollar demand is going to cause the price to go back up, which is going to cause gold to just consolidate for a long time.
I know, but the dollar's heavily oversupplied right now as well. There's a heavy supply of the U.S. dollar in the markets.
It is.
Yeah, but the demand for it is low right now. That's why the price of the U.S. dollar dropped.
Okay, supply and demand are relative. So it's low compared to the supply that's available. Once all these companies and all these banks start to suck up the US dollars off the market and the demand comes back in, then you're going to see the price come back up. You're going to see the value rebound. Listen,
of course, everything that's just how the market moves, right? Everything that goes down is going to go back up. But I'm talking about like what would cause the US dollar to become favorable again?
Because 70% of the global trade is denominated in US dollars.
I understand
that's a lot of money. That is trillions and trillions.
That's why the US dollar is the world's reserve currency. That's why I get that.
Yeah.
Right? But when you have heavy market, one of the reasons the US dollar's demand got heavily inflated is because it's the world's reserve currency and it gets used as a safe haven vehicle as well.
Yeah.
Right? So when you have extremely optimistic markets like we have right now, that's one of the reasons why you've had the US dollar demand heavily decrease, but you've seen risk currencies heavily inflate. So right now, there's a heavy oversupply of the US dollar in the markets from what the Fed's printed out and the heavy stimulus going on. But the demand has just been dropped down because what the market has been ignoring a lot of this coronavirus impact now because the economic impact has started to fade. It's just been negative headlines and stuff like that, right? So that's why we've noticed, even with all these negative headlines, U.S. equities are rallying, right? Risk currencies versus safe havens are rallying, and safe havens like the Japanese yen or the Swiss franc or the U.S. dollar are flat.
Well, okay, no, let's take that apart piece by piece. The reason that the equity markets are rising is directly related to the fact that they're printing dollars. They print dollars, give it out to banks. Banks don't have anyone to lend it to because it's an unfavorable lending environment. They end up putting it back into their own stocks or putting it into their 401k plans for their employees. That money ends up in the equity markets. So the equity market rise is directly related to the fact that they're printing unlimited dollars. But let me ask you a question. Do you think that there is another currency in the world that could replace the US dollar within the next 5 years as a global trade currency? And if so, what do you think that is?
No, but I never said the US dollar was not the world's reserve currency. I was just saying.
No, I'm saying, will it continue to be? Will it continue to be?
Yes.
So
and if nothing changes with the current way the system is run and how the central banking system is run and the way the money supply works, the US dollar is still going to maintain its same power in the long term, of course. And it'll get bought up.
So if we can agree that everybody's going to always want dollars and the US government is going to be one of the most trustworthy governments to issue a currency, doesn't it make sense that the demand for that currency is only going to be going up as GDP starts to pick back up, as global trade starts to pick back up, as travel starts to pick back up, and as commercial trade starts to pick back up? Don't you think that the demand for the dollar is going to be strong? Because I'm looking at countries like Chile, Argentina, and my home country of Lebanon. They need dollars because their currency is worthless. As soon as the market makes available dollars, they're going to suck as many as they can out of the market. That is automatically going to signal to some of the more developed countries to do the same. So the Eurozone is going to do the same because they need dollars to make the euro worth something. They're just going to keep buying up dollars, buying up dollars, buying up dollars. If there's everybody buying up dollars, it's going to make the value go back up. This is not a popular opinion, by the way. If you guys turn on CNBC or whatever, they're going to say bearish dollar because it's the only way we're going to be able to get out of our debt. I'm telling you guys, that just doesn't make any sense to me. Everybody needs dollars. I've been around the world.
I'm not saying anything about the bearish dollar. I just came in when you were talking about that US dollar demand is high. And I was just looking at that. I didn't see that right now. I don't see US dollar demand being high like at any present moment right now with how everything is going on.
Yes, if I can.
No, that's fair.
Yeah, I didn't see that until what you said. There's more signs of actual economic rebound. And then, of course, you have like the market environments change where all the liquidity gets cashed out of gold. And like you said,
the economy is not rebounding. The economy is not rebounding. I wrote 2 articles on why we're going into a depression. I'm not saying markets and economy are 2 completely different things. The markets are rising because we're printing money. The economy is terrible.
I know, but did you not just say like a minute ago that the US dollar demand will start picking up because everyone will trust the US government who's issuing these US dollars because GDP and these other economic figures will start getting better?
But I'm not talking about economic figures as in consumption and manufacturing. I'm at the economic figures in terms of employment, in terms of how many people are back at work, how many people.
Okay, so but those
are the money markets.
But those figures you're talking about, all these economic figures, like employment, work hand in hand with consumption and retail sales and all this.
Let's go back. What is your principal argument? What is your principal?
I'm saying that doesn't make much sense to me. That now you're saying the economy is not going to rebound, but you said the U.S. dollar demand would be favorable because a lot of people would have faith in the U.S. government and trust the U.S. government because of rebounding or stronger GDP in these economic figures. Well, those economic figures being stronger, whether it's jobs or whatever it is, if jobs data is stronger, all those things contribute to the gross domestic product because it works hand in hand with consumption, inflation, retail sales, and all that. Okay, so if you have all that stronger, that's an economic rebound.
Yes, see what I think. What I think is what's going to happen is now.
So how can you say that the U.S. dollar is going to be favorable, the demand is going to increase if these economic figures rebound, but you're saying it's going to go into a depression?
I think Jeb came prepared today.
Is the disagreement between the overall direction of the market is the beauty of market. And so you and I can both put a bet. Is you're going to put a bet on a U.S. dollar sell. I'm going to put a bet on a U.S. dollar buy. That's the beauty of trading. There has to be somebody on the other side of your trade. If we all agreed, there would be no market.
No, I'm not saying.
And so I completely respect that decision. And the only way that we're going to be able to tell is for the market to play out. And so I'm going to put my US dollar buys in.
I'm not saying I'm going to put a bet on either side. I'm just saying, like, the point you said just like it contradicted itself, right? It didn't make much sense right there. Like you're saying that dollar demand would increase when economic figures are increasing, leading to an economic rebound. But you're saying the U.S. is going to go into a depression. You're doing a study on that. So what would make the U.S. dollar demand actually increase then?
Global demand is higher for the U.S. dollar than the domestic demand. The U.S. can go into a depression and global demand still be high. Other countries don't care as much about shutting down their economies as we do because they can't afford to. Like India is going to open up before we do. India still needs dollars. There's not going to be a non-existent demand for dollars. The question is, are they going to print more than what people need?
So
are they going to keep printing more than what people need? If they do that, there's going to be an oversupply. If there's an oversupply, price goes down. It's really that simple. It's not about us. It's really about, are they going to print more than demand? The demand is there. I can promise you this. Unless global trade is going to be denominated in the yuan, the demand for dollars is there. I can guarantee.
I understand that. Alec, I understand it's the world's reserve currency, but what you just said makes sense because if the U.S. goes into a depression, or of course the whole world would be following that sort of economic cycle of going into like a recession or a deeper recessionary phase, right?
Not necessarily.
Yo, so listen, I have a question.
Oh wait was different. Oh wait, the only reason the world world followed in our depression is because we caused it. Right? We caused the depression. It was at the heart of the financial center of the world, and that's why the rest of the world felt the shock. This time around, all of our banks are too well capitalized, dude. This is going to be a different beast. This is going to be like a cleansing of all the shitty companies.
But coronavirus. Okay,
how about this?
How about this? 2008 financial collapse.
Do me a favor. Let's take this conversation. Let's take this conversation after this call.
I have a question.
I know guys are looking at the charts. I don't want to take up too much of their time.
No, I have a question related to this conversation right now. I have a question, and you guys have to answer my question now. Now, please. if let's say the value of the dollar, let's say now I was really listening, and you guys were talking about how they're printing more money, right? If they're printing more money, and if there's a lot of US dollar in circulation, right? And if let's say like the majority of the world trade is done in US dollar, can everyone like sit around and say, hey, wait a minute, the value of the dollar is going down. Why don't we just drop the dollar and bring in some other, like, this alpha currency to trade in, like the yuan or the euro or the pound?
It's possible, but it would change. It's very unlikely. Like the U.S. dollar, I agree with everything he's saying about the U.S. dollar being the world reserve currency, and I agree with what he's saying about if you go into a lot of economic uncertainty, the demand from other countries to have more U.S. dollars increases. That's what we saw happen when coronavirus first hit the scene, and why the U.S. dollar heavily inflated and these other safe haven currencies inflated. But to say that, first of all, the negative impact from the 2008 financial collapse that was caused from the US, or you want to say it was sourced from like North America, that's fine. But coronavirus has had a far worse impact on global jobs, global manufacturing, and all this than coronavirus has ever had. So I don't understand how you can say the possibility of now depression for other country. Like, I don't really understand that, because the negative impact on actual economic data of coronavirus versus the 2008 financial collapse is not even near close, from like the impact it had on everything from automotive to consumer inflation, everything down the line. So, and you can compare these figures as well. You can go across the board from manufacturing to see how many jobs are lost. Unlike something that just hit the financial sector and then had a ripple effect outwards, coronavirus canceled out dozens of different sectors and industries for an extended period of time that will still be suffering even when you go back to these lockdowns.
It didn't cancel them out. It put them on pause, which is a very big difference, which means like the airline industry is not dead. It's the second they open up the floodgates, it's not going to be like 2008 where people have different spending habits. I think people are going to get more aggressive after this time around. So listen, we can talk about this off. Raja, what you were asking was about, could there be another reserve currency that can come and take over? This is kind of like that question of, can we just change all the speed signs in the country because they're all too damn slow? It's in order to change the speed signs, it would cost them something like $420 billion to change every single street sign. Basically, it would be too expensive to unravel the US dollar system. And it's just going to take us 15 years to even be able to do that, to reshift global trade, to reshift the way that euro dollar market, to the oil markets. Everything is denominated in dollars. So we're going to have to redo that whole system. But I'm a Bitcoin maximalist, so you guys can do with that information whatever you want.
Oh, okay.
Is this
that
dollar,
makes sense.
Is it sustainable for them to keep printing dollars? I don't know.
All right,
It's not a secret. How
just
much
one thing-
money you made on like monthly basis? Not a secret with that method.
What's up, brother?
How much, if it's not a secret, how much money have you been able to produce monthly with that method of trading?
Which method?
Those which you use.
Your trading style, he's saying.
The support resistance Wyckoff?
Yeah.
I don't know. I mean, I guess it depends. How much money you got in your bank?
Okay.
Like,
yeah, that depends on risk. That depends on what you're trying to do.
No, I'm being serious. If you're one of our students, bro,
in percent.
if you're one of the students, I'll show you my MyFX book. But I'm not gonna disclose how much money I'm making.
In percent, maybe if you can in percent, then it.
Sure. So I aim for 5 to 10% per week.
Okay.
Do I consistently hit that? I'm not gonna sit here and lie and say I do. But will I hit that 3 out of the 4 weeks of the month? Most likely, yes.
Okay. Thanks.
For sure.
I see. When we were talking about Bitcoin thing, I personally think we're not moving above 20,000. I mean, if we do, not above 50 at least. I think the more, it comes in circulation, and these big institutions, they're just going to regulate it. And once it's regulated, it's just going to range between, just like how currencies, it bounce between the levels.
People are loving the stream, by the way, if you're reading these comments. But I definitely, I agree. I agree for sure.
So just one thing before we start. Hey, guys, please do not interrupt me while the guest is talking, Jeevan's talking, and Roger's talking. All right? Just wait till they finish and jump in, okay?
Thank you, Kevon.
But
Kevon's from Florida.
On the Bitcoin question, I wrote an article, and I'm not trying to plug anything. This is all free. I wrote an article. It's on our website. It's under the analysis tab, and it shows the different levels of volume that Bitcoin needs to hit those different price levels. So for Bitcoin to hit 50K, for Bitcoin to hit 100K, I showed that like there would need to be 500 billion or $1 trillion worth of money in the market. And so it shows you, it's like if there's an extra $1 trillion that goes into the Bitcoin market, it will reach 100,000. Is there $1 trillion of loose money somewhere that can actually get us to that 100K mark? That's a big question. So I don't know if it'll reach 100K, but here, click on the chart addicts all the way on the left. It should take you to the front screen, and then hit the analysis page.
Go to
There
chart
it is.
addicts on the left, and then go to
Oh, my bad. Yeah, it's on the top. It's under analysis. And it should be under the fundamental analysis section. I was going to say crypto, come back, why Bitcoin, why now? That third one?
Okay. 10 minutes ago. Oh, 10-minute read. 10-minute read.
Yeah, it's a little long. But if you scroll down to the bottom, I put a little math. How much money needs to be in the markets in order to... I think there it is.
Okay.
So that's the market cap per price.
President usual, hundreds of billions dollars to be invested. Yeah, it's pretty sick. Like to get Bitcoin to 50,000 needs to have a $1 trillion market cap.
Like, is there $1 trillion worth of money that's going to find its way into that market? That's a huge if.
Yeah, Bitcoin. I'm on the sidelines with Bitcoin. I'm not a big advocate of Bitcoin. I think it was these people, like these super nerds who wanted to own something. They started Bitcoin and then it got out of hand. You know, now the super nerds are like, oh wow, well, we made a bunch of money, and now now we've been caught, and now it's just gonna get regulated.
Yeah, I mean, we'll see, man. That's the thing about these things. It's like only time will tell. I thought Dogecoin was a joke, and that's one of the highest performing coins right now. And I don't know what to do with that information. Raja, how long you been doing these live streams?
We started in August 2018.
Sheesh, man.
Yeah, August 2018.
That's insane, because you're doing these sessions, these live sessions for hours, and you're going back and doing your highlights. So you're like instantly back testing every single day live for hours. It's kind of nuts.
Yeah, like I watch the charts for about 2-3 hours, and then I do the highlights. So highlights is just me going over what I did in the morning. You know, like most time when guys are looking for trades in the afternoon, I'm going over the trades I took in the morning. You know, so I'm not looking for trades. You know, I'm marking up the chart. I'm making arrows, making it nice and pretty for everybody. You know, like back in the day, I'd be looking for trades at that time, and that was a very toxic way to look at the markets.
Yeah.
So your podcast, what gave you the inspiration to do these podcasts?
It's kind of selfish. I just wanted to be able to talk to people who seem to be where I wanted to be.
Yeah.
And just take their insight. Because it seems like there is no one personality for a winning trader. And that's something that I used to think, like, you know, all winning traders had one personality type. Once I realized that it was like, you could have your own personality, but there was winning commonalities. I was like, what are those commonalities? And I thought the podcast would help kind of clear that up. And it did. It did. Like all the people that we've had on the podcast, you included, Raja, these are people that do not quit. These are people that do not give up. These are people that went through the trial and error period of their trading, lost some money and never gave up. These are people that are disciplined and that they do things that other people aren't willing to do. They're willing to prep on the weekends. They're willing to wake up early like you're doing right now. They're willing to put themselves out of their comfort zone by calling out trades and putting themselves on the line. You see, so it's like, it's all these different personality traits make these winning traders. And I just wanted to figure out that thing. Like, what should I really be focusing on? And a lot of traders at home kind of found the same value in that. So,
yeah, there's this question. Can you ask if they use fair value gaps or order blocks? Yeah, we got a lot of questions on like order blocks.
That's a question for Ted. That's not a question for me. So once I get a brokerage, I'll ask you. Actually, Daniel, don't you have a brokerage? Yeah, that's not a question for me.
Yep.
August.
CoinZoom. Guy, I can't give recommendations on specific securities or specific investments. I know that coins are not securities, but you know what I mean.
Yeah, order blocks. I started learning order blocks, and it kind of seemed to me that order blocks were just consolidation areas. Like let's say if price is moving up, right? If price is moving up, so I believe that when candles are moving, candles are always looking left. They're always looking left to see, okay, what did my buddies do previously? So let's say if price is moving up from here, it's going to start looking left, and it's going to look left and say that, okay, well, here was consolidation, so maybe price is going to start to reject here, it's going to start to consolidate. So then someone would say, okay, yeah, so that's an order block, but I'm going to say, no, but that's just area of consolidation. So I think order blocks are just little boxes where price has consolidated before. So when price reaches that point again, it remembers that, hey, I consolidated here or I rejected here. So now there's a higher probability for me to reject or consolidate here.
Okay. No, I mean, that makes a lot of sense. That makes a lot of sense.
I'm just making shit up.
Yeah. But that's kind of what
I'm sure
trading
that is
is.
what they mean.
So we're all seeing the same thing, but we all just have different ways of explaining it.
Yeah, I agree with that 100%. Which is the channel of podcast? I can't find him. Okay, so the channel name, the podcast channel name is
Chart Addicts.
Chart Addicts. So let me ask you this. So like a lot of people, they start a lot of like, services and things. Oh, you got 200 likes, damn. Like they start a lot of services and stuff like that. In the start, when things are slow with something that you really want to start, how do you cope with that, or is that something you don't focus on?
No, I try to get to an area, establish an area of foothold as soon as possible. Like literally put your head down and keep working until you have something tangible, and then start from there. You really never want to start from the beginning. It's like you haven't really started till you're in the game, if that makes sense. Yeah. So if you guys want to start a podcast, for example, until you get some guests that people really want to see, you don't really have a podcast. So what people want to do is they want to start off small, grab some small time guests, because it's kind of like comfort zone area. You have to really take yourself out of your comfort zone. So doing the first podcast, even though I knew a lot of the guys that I was interviewing before, like I knew Ken and Q from before, but it was still kind of intimidating to get on and just do this full-time interview. But I was like, nobody wants to see Joe Schmo Trader on these interviews. They want to see Raja. They want to see Ted. They want to see Ken. They want to see Q. They want to see people that you see on IG and you're like, okay, they seem to have this shit figured out. So that's kind of like, just go big. Go big for sure.
Man, I think you should get some really controversial people on too.
Like who?
There's this dude from Instagram. He has these crazy 30-day course, this insanely overpriced 30-day course. And basically what that 30-day course is, it's a one-on-one for 9 days, right? For 3 hours each, right? So the way that the way that 3 hours are set up is that the first 2 hours, he kind of like talks to you about, things and stuff like that. Then the last hour, there's a homework. Right, so this happens for 9 days, right? And the rest of the days, you're just looking at the charts, analyzing, doing homework, and that whole thing, it costs $55,000
Jesus.
From Singapore.
Oh hell no!
He's got 4 Lamborghinis. He's gonna buy a helicopter soon, and I'm thinking, man, no shit. This guy, you're making 50 grand. Oh my, no shit, you're gonna buy a helicopter. See, you're gonna buy a submarine too.
Yeah, that's the thing. Is like about the pricing for Forex education. It's what are you really paying for? If it's education, you have to understand how much is education really worth, as opposed to like actual like practical knowledge. Education is something like learning support, trend line. They teach you a strategy. Can you go in there and do it every single day by yourself is the real question. But I don't know. Listen, Raja, I'm not doing this for clout. I'm not doing this for views. I swear on my life, every person we've ever had is supposed to be useful. It's supposed to provide free value to people on YouTube. It's supposed to really get people out of their, like, it's supposed to get people unstuck. That's really the point of the podcast. So I'm not gonna get people on just to clown them, because that's what I'm gonna do with this person. I'm gonna tell them, I'm like, are you selling support and resistance for $5,000 a month? Are you selling break and retests for $6,000? That's a crime,
bro. So you are on the podcast to be clowned today. Are you ready for the podcast today? No.
Hey guys, can I make a point on value and education?
Please.
So I spent about 2 or 3 grand on a security course, trading cryptos, and I have to be honest, it was actually one of the best. It was the best money I ever spent. And the course went through all the kind of security lapses that people make and newbies make. And I spent about £3,000-4,000 on it. And the thing is, at the time I was saying, you're wasting your money, it's not worth it. But I looked at the calculations and I said, well, if I'm expecting to make 20, 30, 40 grand a month, 50 grand to learn how to, keep your money safe was bang on the money, And the thing was, nobody else was offering it at the time. And I couldn't figure it out from the books that I'd read and the online stuff, because sometimes a lot of the stuff that's online, it's just very sparse, and it doesn't have the detail that you want. And I think that it depends on what you're trying to achieve and where you think you're going, right? If I thought I was going to make a lot of money, I think I'd want to keep my money safe. So certain courses, yes, they're expensive, but it depends on what they're teaching. With Raja's course, I paid in, and hopefully we're going to have the boot camp and all that. But also the daily mentoring, sending my charts and getting an analysis, which I think a lot of viewers don't see on the other side. I say, every time if I get a losing trade, or if I get something that I'm a bit confused on, I send it in and I get feedback on every single thing. And I think it was worth every single penny, you see.
Sure.
So I think if you can get value for what you're doing, even if it's 10 grand, 20 grand, it's, it is,
What did you find the most valuable as opposed to what you had learned before? Was it the fact that you had an interactive system, or was it the fact that it was a cohesive curriculum that made it valuable to you?
Okay, so the first thing they did, they got me a Bitbox, and they got me a Ledger Nano, and they got me the treasure. I forgot what the other one's called, the treasure. So they gave me all three, and it was interactive. So I got to learn how to put the money in, how then to lose everything and then restart it up again on every single platform, and then how you keep it safe, how you would what's the fastest way to do the transactions, and then a little bit of the arbitrage as well. So you make profit in, say, you've made a trade, you've made profit. Now, how do you take that crypto profit and hold it as well? So there was I'm not going to mention anything, but there was some ways that you could convert it into gold temporarily, and that was much more stable comparative to crypto and things. So that kind of knowledge and is what I gained from it. So not only the security side of my settings on my computers and my Wi-Fi and all that, there was the actual physical things themselves, and actually how the trades would manifest. So you've just made profit, you've made $500. You don't want to leave it in a crypto, you want to transfer it to a stable coin or something else. And it was the best money I ever spent, because you could kind of figure out how to do it online, but that that specific knowledge, I don't think it's out there, in any book,
For sure. No, that's definitely fair. That's the crypto space is so confusing that there really does need to be a course. Actually, I guess it's the same with Forex, but the Forex is just overplayed. So I guess what Raja was saying is it's hard to discern the credible information from the non-credible information. But the course you took literally sounds like the best case scenario. Sounds like you got everything you needed to learn. They taught you practical steps on how to actually manage your money after you took it out. So that's really good. The practicality is awesome. That's the thing. It's like everything needs to be practical. That's why when I was having the discussion earlier, I think it was with Jev. Yeah. It got a little bit too abstract and it wasn't very practical. So that's why I always try to wind it back, be like, okay, how can I take a trade from all this crap that we just said? Because it's fun to go into that rabbit hole of information and knowledge and abstract structure, but it's really important to be like, how can I make money off of this information now? And I'm glad that course was useful. It looked like it just broke and retested, ready to continue bearish.
This one, yeah, it's coming down to that same area where it rejected here, 135, 400.
Yep.
We've been in the same price, 135, 450 for the last like 8 hours. It pulled up and pulled down and just back in this price range again.
Yeah, I think with the NY Open, it might reject and keep on ranging, or it could just continue down, either one of those. So I'm out for the day. So I'll see you guys later. Thank you, chart addicts. I'll follow you.
Thanks,
My
man.
guy.
Thank you.
Bye bye.
See you, man.
Bye, Danny.
Oh yeah, this was it. We got it. So 2 days intensive training, 2200, no problem. This was the most expensive one here. Where is it? Oh, this is 18,000. Ultimate class. No, I'm sorry. It wasn't 1 month. It was 4 days. For 4 days, intensive class, $18,000. 18.
That must.
Do you know the only reason I would pay for that course? There was only one condition, is if this person was a currency trader at the largest currency trading firm in the world, and he literally understood the block system and all this other crap happening behind the scenes. Yeah, maybe I'd pay for that course for like the cheat code, the answers to the test. But other than that, hell no.
Man, but this guy's booked. That's the whole thing. He's booked. July booked, August booked, full complete August booked, man. You want to learn? No, you got to come back in September.
And there might be spa days.
It's amazing. I mean, it's amazing and just crazy
I'm
at the same
feeling
time.
bad for what I'm charging. This guy's charging $18,000.
No wonder he's buying a helicopter, man.
Oh my god.
Yeah. Let's take a look at this chart here. GJ, this is bullish. This is bullshit candle. Yes, I agree with that. It's Friday, man. On Friday, a lot of things can go a certain direction you don't expect them to. The current trend is bearish, but we are at a very strong support. Okay, current trend is coming bearish here at a very strong support. How would you look the charts if you would trade today? Am I missing something? Okay, so if I look at the 4 hour is at a strong support, so I would say, okay, yeah, it should bounce, right? And then I look at the 1 hour time frame, and 1 hour is just doing this weird thing over here, and this makes no sense at all. Because this candle's about to close in 7 minutes, it's closing bearish. I don't know, like it's closing at support, there's no buys, there's no sells, it's just very difficult. Sometimes, when you're looking at a chart, it's not that you want to make sense of what's happening. Right? Not every time you're going to look at the chart and say, okay, you know what, I know exactly what's happening. Sometimes you're not going to know. Sometimes, you maybe want the candles to maybe break in a certain way or close in a certain way so that you can maybe say that, okay, now I know exactly what's happening. Sometimes you're going to say, okay, well, I have no idea what's going on, so I'll have to wait. And what are you waiting for? You're waiting for two candles to print in a certain way, which you identify somewhere from, like, last week, last month, or maybe like from yesterday. So then you can say, okay, what, this makes sense, and this is the trade I can execute on. Just like when we had this candle here break the high of the previous 30-minute, and we realized, okay, what, maybe we're forming a support and we're going to continue moving up, and Daniel came with the chart and Mac came with the chart, and they both said, yeah, we're going to go up within trades, and that happened. Right now we're coming back to this area, so it just gets a very, very hard to kind of know what's going on, because it's now just ranging here and it's Friday.
Guys, thank you very much for the week. Thank you, Rakeel, Shark Addicts. Thank you kindly for spending your time with us. Thank you, sir. And team, stay safe, stay strong. Take care.
Thank you.
Bye. Yes, sir.
See you. Yes, sir.
Later, man. Is this a range? Yes. I would say this is a range. So in this range, you have two ranges. One over here, one over here. You have 135, 400, and then down over here, 135, 220. Where's that echo coming from? Testing. Alright, echo is gone. Ooh, maybe you missed the chart address. Okay, so we have a pretty big question here for you, Roy.
Yeah, I'm replying right now. I was gonna type it, but you mind if I just answer verbally?
Oh yeah, for sure. So the question is, so you just read the question and
it's basically asking if Bitcoin's going to be, because right now Bitcoin's mostly used for anonymous transactions on the dark web. If at any time Bitcoin is going to become legalized for the legal industry, doesn't the central banks create their own crypto? So I think it's a combination of both. So what they're going to do is you can't take away Bitcoin. That's kind of like the main thing about Bitcoin is that it does not rely on the permission or trust of any government, because you can't really trust or rely on governments. So what he was saying is, are they going to create their own? Yeah, they're going to create the US dollar coin or the Fed coin, which they've already tried to do. They're starting to take cash out of the society. They're starting to accept electronic payments everywhere, because a cashless society means they can transition to an electronic network and just create a new Fed coin. But that doesn't mean that Bitcoin's going to disappear. Bitcoin is made so that you don't need the permission of your government. Now, Americans don't really understand that, but if you go somewhere that has a very corrupt governmental system, like Zimbabwe, or like if you're going to talk about North and South Sudan, if they don't have a cohesive governmental structure to use a currency, they need Bitcoin to transact with each other. So it's like developed countries are going to create a new digital currency for themselves because they don't want to lose their purchasing power. But developed countries that don't have access to dollars, which is where that dollar demand story comes back in, they're going to have to find an alternate source of currency to be able to transact in. So that's going to be the biggest story over the next 10, 15 years. If any economist says they know what's going to happen with the dollar and cryptocurrencies, they're lying to you. This is like really genuinely a very uncertain time in financial history. So central banks will never and can never. That would be centralized currency. That's not the same thing as decentralized big key. That's what I'm trying to say. If they create their own coin, it's going to be backed by the dollar, like the Fed coin. So it's going to be just like a digital dollar. So it's not going to be any different. Bitcoin is a purely decentralized currency, not relying on the faith or trust of any government. All right, guys, I got to run and get on a call. Raja, really appreciate you for having me. This is by far one of the most interesting live streams I've ever been on. A huge community of traders. The questions in the chat are off the charts. The guests you have on here are insane. The panel that you have. Daniel, I want to get you on that podcast if you got time, so hit me up after this. Raja, I really appreciate you, bro.
Thank you, man. Thank you for taking the time.
All right, everybody, take it easy. Happy and safe trading. Don't do anything stupid today.
Thank you. Have a good weekend.
Thanks, you too, man.
Have a good one.
Was this trade right or wrong? I made a loss, but I think TA was wrong. TA? Teacher's assistants?
I am not getting on a podcast with that guy. He talks way too much, bro.
I think it's a good way for people to see like how, like, you know, I'd say, I don't want to say idols, but idols are doing and what they do every day. Like, what's your daily routine like, Daniel? What do you do?
Oh, me currently, honestly, bro, I've been barely sleeping. I'll be real. And it's really been messing up with my trading. Like, a lot.
Like, not sleeping at all. Having a hard time sleeping?
Yeah, dude. So, you know, I actually had to go the route everybody's been begging me to go for the last 7 months. Even you.
Oh, yeah.
And what route is that?
The flowers.
The medicinal route.
The medicinal route.
Yeah, you should be sleeping more because of that.
Oh, man. I slept like a child last night, bro. Wow.
Nice.
Woke up 1 in the morning. I was like, yeah, lit. All right, cool. We got an hour. Monty gets on. Oh, man, today went by so quick, bro. Got some nice little trades, some little break-even trades.
Please respond if trading with risk reward of 1-to-1 is a bad idea. Can we win enough to make money? Yeah, I trade 1-to-1 all the time. You know, I would say 90% of my trades are 1-to-1 trades. It doesn't matter what your, I mean, to some extent it does kind of matter what your risk reward is. I mean, it should be positive, but at the same time, you should know that your win rate should be higher than 50% as well. I also think that risk reward is very, very variable, because let's say that someone takes a sell right over here, right? Their TP is all the way down here and their stop loss is right over here. So now what this would mean that their risk reward is 1-to-1. But let's say if price breaks below 135.400 and comes into 135.350, provided that 135.400 was a strong support and now price has broken this and now it's over here. What happens when you bring your stop loss down? Now if you bring your stop down, now your risk reward has increased. So I think risk reward is very variable, because now if you've really tightened your stop loss, now you went from 1-to-1 risk reward to, let's say, 1-to-2 or 1-to-3, because your risk has really decreased. I was having a conversation with somebody yesterday and we got into an argument, and my argument was, well, if you're in profits, you're never going to leave your stop where it is, because if you leave your stop where it is, you're going to be at 1-to-1 risk reward. And that means that you're willing to let price come all the way down to your take profit, not hitting it, and then coming all the way up to stop you out, right? But that's not the case, because when we enter a trade knowing it's a 1-to-1, but as soon as you tighten that stop loss, now your risk reward has increased significantly. So I think the risk reward is just variable.
That's the same conversation I had with a guy that I was teaching how to trade. He was basically a profitable trader, but every time he was up 20, 30 pips, he thought that he was always right. It's supposed to go to his take profit. Then it comes back and stop him out.
Yeah.
So I said, why don't you go for it instead of trying to hit 50 pips? Why don't you aim for 15, 20? And that just changes whole trading.
Yeah, man. I mean, it's like you're in the ring. When you're coming through a trade, I think you're stepping in the ring to fight Mike Tyson when he was 21 years old. There's no way you're winning in the long run. There's no way. If you're aiming for 50 pips, 100 pips every day, there's no way you're getting that. So what you got to do is you got to come behind that monster and punch him and go back out of the ring and come back the next day. That's all what you got to do.
Correct.
That's your task every day,
Break him down.
Yeah, just slowly, one hit and just go back home. Don't worry what he says. Oh, you hit like a pussy. You hit just once. Because like people tell me all the time, hey, you grab like 10 pips and 15 pips, but that's fine. I've built an empire on that. So.
But I remember back in the days when I used to post in our chat, they're like, "Hey, man, you only grab 10 pips," and people used to laugh at me.
Yeah. So people like you don't know Kevon. Kevon has been with he's been with our group from the start, like 2016, right? Like a long time ago.
Yeah, 2016.
Yeah, he's an OG. He's been in the game for a very, very long time. I always can't catch 50 pips, instead only 20, so I changed my target for now. Anyone in any positions? Not me. I'm not taking a trade today. It's a Friday. Fridays are meant to just chill, relax. I think Friday is a good day where you can really exercise discipline. If you can really hold back from executing on Fridays, I think you're halfway there with discipline. Oh yeah, we got Charlene here too. She's an OG too. She's been in the game for a very long time. She's had her blood, sweat, and skin ripped apart in the game here, but still hanging on and doing good now. So, so that's pretty good. Man, I think most of us who are doing good now, we've really grinded. It's like when you ride a bike and you fall off the bike and you just like trail trash on the road. Just keep on slipping, and then you stand up. You're like, I'm good. Just another day. Can you check my chart? Let's take a look here. Let's take a look at this chart. This is you're looking for it to go up, but it's in a range here. There's this resistance right over here. This is a very risky trade to take on Friday. You know, you want price to come up. This is, I mean, there's this resistance here. I mean, if you want to take it for sure, you know, if you have risk reward, I hope it works out for you. And I think it should, since you're in buys and someone was in sells. I think the sells also work out for you. You know, so it's a Friday. You know, it's a Friday. It's risky. So yeah, if you don't play with risk, that's fine. If this was like a Monday or like if this is like Tuesday, Wednesday, Thursday, I'd give my honest opinions. But you know, it's Friday. Friday's like they're like whatever it is. GJ 30-minute. I think this was from earlier. Oh, okay. Took a sell once the 30-minute candle broke the low. Okay, moved stop loss to break even over here, and didn't take profit. Got stopped out. Was this a bad idea? No, I think this was a very good idea. When we were looking at this chart, when this candle was bearish, we all thought we are going to continue down towards 135, 200. You know, but I guess there was this support on the 15-minute, kind of like right over here, which kind of like got rejected. You know, and then price started to move the opposite way. Hey, Raja, on Monday, please show me example about this. I can't find an answer to this. So when there's no wicks, why the next candle will not move? Well, when the candle has no wicks, that means there's no range. What is the stop loss you use? I use a 100 pip stop loss. What do you think? What do you think about bullish candles without wicks under the candle? It just means there's no range. Oh, Indian betting, 100% sure. Pass match T. Indian betting has hacked into the gulag. Indian betting is selling their betting services, man. How do I decide?
I was wondering if you...
Anybody in GJSL? Man, it's Friday. Friday, things are just ranging. Just
yeah, price is about to range big time.
Yeah, just gotta relax. Oh, we got Ambidex here. Man, you moved away for a little bit. I looked at that bed and I looked at that window. I'm like, wow, that is insane.
Nah, I'm in Miami. You know this from when we did the boot camp down here.
Yo, let me show it to people who haven't seen this stuff before. No, because we got people from all over the world, you know, like the other day I was just thinking that we have people from all over the world from different backgrounds and like, you know, some people have experienced or seen things we haven't done. And then there are people who haven't seen or done things that we do on a regular basis. For them, it may be like, oh, wow, what? Like, I was in the grocery store and I was making Instagram videos and some guy messaged me saying, oh, wow, is that what a grocery store looks like in Canada?
Oh, I see what you're saying. I
You
see
know?
what you're saying.
Like, everything stacked on the shelves and, like, proper, you know, organized. And, man, in Pakistan, it's like a jungle sometimes, you know? You go in there, you're like, where are these things?
Dude, yeah, because I saw milk. I'm like, who puts milk in a bag?
Canadians, man. Canadians do that.
Never seen that before.
Yeah, it's I think that's what they do is they'll sell you milk in a bag, and then you have to buy a white jug. It's a separate jug which you need to buy to put that bag in that jug, and then you pour the milk out. Yeah, man, it's pretty crazy.
So I wasn't the only one because everyone in the comment was like, milk in a bag. I thought I was weird.
Yeah, so you gotta buy milk pitchers basically. Yeah, it's like a, yeah, so this is what you buy. So you get that bag. That bag has 3 small milk bags in it, and then you put that bag in this bag, in this thing over here. So we're paying more for milk.
Someone said those are goat milk. Is that true?
No, that's not goat milk.
Okay.
Yeah, They got a bunch of goats lined up every morning. All right. Time to huff and puff. What do you mean by there's no range? Oh, all right. So, yeah. So when you have a candle and a candle, let's say this candle, right? This candle has no wick on the top. This means there's like price couldn't even move up. There was like no range, so it just dropped down. That's basically what it means. So you have to look at it over and over again to kind of like base your own, what's the word? Base your own bias on it. Looks like divergence going on. Yeah, I think so too. Divergence is happening. Let's take a look at that idea here. Divergence. Let's see if I can get divergence right. Relative strength index, right? RSI. What else do we get here? Yeah, just RSI. So I don't think there's divergence happening because this trend line is maybe going down over here like this probably, and this is going up. Oh yeah, this is divergence. So what does this mean? Price is going to go up or down? I mean, there's the opposite.
Divergence happened a while ago. Let me show you something.
I'm not even close then. It already happened.
Basically, you had this leg and this leg. Okay, so as you can see, this leg is kind of the same, but there's some sort of divergence in here.
Like it dropped further below?
Yes, in here and from here. Somebody wrote something, so now on the chat I can see the trend line on at the bottom.
Someone. Okay.
So yeah, basically that's basically divergent, and as divergent happened, it happened here because we are on a bearish move. So basically you start looking for M's and W patterns. Basically that's the concept. But as you can see here, it's another divergence. So it's basically range. I will be trading anywhere in here as long if this RSI start crossing the 50% and come back something like this and start pulling away from the 50 baseline, you're Gucci. So you can start looking for buys. Other than that, don't do that. You know, if price continue below the 50 RSI, it's okay. The 50 value, it's somewhere here.
Man,
somewhere here, the 50.
Better be careful, man, because we might get an RSI specialist in here, and you might get them mad.
Yeah, no, but you know, I don't trust this thing anymore. I mean, it's lagging. I mean, you know, all the indicators lag. So if you use heavy stop losses, yeah, it should work for you, but not for me.
Let me just say something. RSI is the worst indicator ever.
Yeah.
Ever.
Hold on. Can I please say something? So real life, I lost maybe like 8K trading gold on RSI when I first started. No.
Yeah. Yeah.
A lot of traders.
Yeah.
A lot of traders.
Like I
would have stopped after 2000.
Yo, I started trading and I was like doing the whole, I was like just selling the overbought. And bro, I thought I found the golden ticket. I ran up like 7 G's in one day. And then one day it just kept going down. It wouldn't stop. And I ended up losing like 8 or 9K on like that one trade.
Like, look, this is overbought right here.
Yeah.
This
the
is
amount
overbought.
of people that sold.
Yeah. Sell. No.
Don't worry, man.
No.
Ouch.
I mean, I think 80 or 70% of traders use RSI as a confirmation, you know, but it's not good. I mean, all depends on your style of trading. Basically, you're gonna need to know a lot of price action principles. Other than that, RSI doesn't work.
Correct. Because when I used RSI 10 years ago, I thought it was like I found the golden ticket, man.
Tell me about it. Yeah.
That's what I want to let everyone know. That's RSI is the worst indicator ever.
I think any new beginner, when they find RSI and it works the first 2-3 times, they think they found the cheat code.
Exactly, that's the thing. Yeah,
and then they go
agree
full
100%.
margin. They go full margin on that fourth one, and then you start sweating.
Man, there was a time I started learning divergence on RSI and MACD. And wow, I went down the rabbit hole deep, man. I wasn't even looking at the candles anymore. I was just looking at divergence on RSI and MACD. So I would plot those two charts on top of each other, and if their lines were crossing, I just looked for some. It was just retarded what I was trying to do. It would make no sense at all.
To be honest, I think everyone that got started with Forex started with that, and it's just like it's not good.
Yeah.
Do you really mean that? 10 years? Oh yeah, man. Like Kevon is an OG. He's been here for a long time.
Yeah, man. I don't know why people can't believe that I've been trading for 10 years.
Because you look young.
Because they all started 2 years ago, 1 year ago, 2 years ago, 3 years ago.
See, so this is what I got to tell you guys. Like, when I got first started, there was no streams. There was barely information on YouTube or in Google. Like, I had to pick information out to learn. Like, when I first started learning, just to find a broker, I had to look at people information on YouTube to see what type of broker, because no one was giving out information about trading. If you wanted like all these free information, if you wanted information, you had to pay $3,000-$4,000.
So let's say back then, right? Back then when you first started, were the regulations with Forex brokers the same as they are right now in the US?
I didn't trade Forex at the time because I didn't know anything about it. Forex started coming around right at Instagram started. And like I told everyone, like Q Banks, we used to work together, and he used to show me like his phones, like he used to trade Forex, and I never understand. He was like, I'll teach you. I'm like, no, And then when I started seeing Forex started become popular on Instagram, which the algorithm started coming around.
My laptop charger.
When the algorithm started coming around and I started seeing like Ellis posting his profits and stuff like that, I got interested. So I reached back out to Q and I'm like, hey, can you provide me that Forex information you were talking about? So Q at the time, the only brokers I think that was around at the time was Traders Way for US clients. Yeah. So he pointed me in the right direction. And then I reached out to Ted, and that's how I learned the Forex side of things.
Yeah, because when I started too, I only saw that there was Oanda, there was FX Choice. Now Oanda and FX Choice, they both had like really high spreads. And then there was Traders Way. Traders Way was kind of like IC markets, low spreads, high leverage. And it never really made sense to me, like, why is the government regulating everyone else except for Traders Way? But
correct.
now I guess...
And I didn't understand the reason why. And now and back then I was so nonchalant, like I just wanted to get started. But all these unregulated brokers, man, like you just have to be careful. Like never keep all your funds in one broker,
Yeah, that's true. Diversify a little bit.
Diversify, yeah.
People are asking about Nick Sean. Nick had some things to do today, so we got Roy on for today. So Nick is going to be as a guest next week. Some people were asking having Daniel as a guest. Daniel is always here, man. He's always welcome here. He gets the link. He knows the drill. Yeah.
So Daniel, you don't use Fibonacci anymore. You trade with naked price action now?
No, I still use my fibs, bro.
Okay, so what? So it seems like you change your game up just a little.
I mean, sometimes I just don't see my Fibonacci playing out. You know what I mean? Because like, like lately the market's just been looking like I'm trading a daily, you know, like something that looks like it's going short on the daily versus something that's going long on the 4-hour. So I mean, lately I've just been 10 pipping it, bro. Just 10 pip, 12, 15 pipping it. Like I'm not even just worried about like that. You know what I mean?
Bro,
Okay,
10 pips is a blessing, man.
so when
Blame
do you
10 pips.
justify? When do you justify when to use your Fibonacci versus not to? And do you use confirmation with your Fibonacci?
Like what I'll do is I'll look for where, you know, the trend is. You know what I mean? I need to identify the trend. I need to see where I feel price is going, whether we're making new lower lows or new higher highs on the higher time frame. I'm mostly focused on the 4-hour. I like to run my 15-minute, 30-minute, and 1-hour and 4-hour on the same screen, just so I kind of see where price is basically on all time frames, just so that way they correlate into where I think price is gonna go. So like I was saying earlier, I ran my fibs on the daily, and that daily was at a Fibonacci. It was on a Fibonacci buy on a 5618 zone. So that's why price created support on the 1-hour in favor. So I have another confluence there, and then it did on the 30-minute also. And currently right now price is 5-minute Fibonacci long at over here, which was the entry at 745, 135.440, which is right now currently about 17 pips right now. So that was kind of cool.
Off of the 4-hour?
Okay.
Yeah, basically I started off the daily fib long. I worked my way up to a 4-hour because it was a break. It's like a break and retest situation on the daily resistance, which I did have at my 50 SMA, which was at 135.200, which was hit 4 hours ago during the London session. So once I saw price reject that and closed on the 4-hour, you can notice that price did also form a level of resistance. A level of support on the 1-hour. So looking at the 30-minute also, it did create support over here as well under at 135.419. So notice how price right now is kind of like on the 5-minute, how it had that high push at 135.625.
I'm completely lost over here. So let's go back to the 4-hour fib, right? So is this how you would draw your fib?
No, because you're drawing it from the top to the bottom.
Oh.
Since I'm
okay,
buying,
I thought I was Daniel was drawing. I was like, man, that's off.
No, that is not me.
No, that was me, man. I'm a noob at this. Okay.
So you got it so wrong. No.
Yeah, still wrong.
No, bro, but it's from the low to the high, right?
Like, no, you're on the wrong low. The push on the bottom.
Wrong high.
There you go.
Where's the other
push
from left to
right there? No, above it.
Up, a little bit more.
Under.
Down.
On the 20th, look on the 20th. That big bullish engulfing candle right there on the 4-hour. There you go. From that wick all the way to the top wick.
So why can't it be from right over here?
Yeah, that's where one of my entries are at. 15 to 60, I call it the golden zone.
So 0.618. Okay. So we got the fib right over here, and then we go down to the 1-hour time frame.
Do you want me? You want me to share my screen so I can show you what I'm talking about?
Oh yeah. Let's do that.
Free gems, boys. Thank me later.
All right. Let's see.
That'd be so much easier.
Alright, how do I do this? Oh, it says host disabled participants.
Make sure you take out all your pornos first, okay?
Oh gosh, I don't want porn on this computer.
All right.
Oh, there you go. Okay, cool.
Yeah, now you.
All right, so let me clean this up. So look over here. If you look on the daily, you can kind of see that price over here on this previous push, like from here to here, we had a 38 rejection. So that was kind of showing me continuation, right? So now I'm going to work my way to the 4-hour and look at this push that we had over here. So from this push right here, I'm talking about this push right here, from this bullish candle, this one here. So this push up here because it created new higher highs after it was stuck in this range over here, basically. So since we did break out of the range, I did have mapped out like this level right here as my level of resistance. And also it did have my 50 SMA in confluence. So basically working our way to the 1 hour, notice like I was talking about, at that rejection, we had support being created on the 1 hour candles right here. So since we have support right here as well in confluence with our previous level of resistance that's being broken, retested now, looking on the 30-minute, we also created another level of support right here within these candles. So look what happened. What did price do? I worked my way to the 15-minute. I saw in confluence also working my way to the smallest I possibly want to go, which would be a 3-minute. So basically looking at the same exact push that I worked my way down all the way to the smallest time frame on the 5-minute, notice how you kind of see the same thing happen within this zone, basically. And then boom, it's already a little bit in profit. So right now, yeah, it's up there. But yeah, I do feel price most likely will come and then retest this area right over here. I'm sorry, it's 30-minute. Yes, like I was speaking. We could potentially see this area right here today hit if we can break above this one right here.
Yeah, you know, I noticed something when you were looking at the 1 hour time frame here. I noticed something here which I'm gonna kind of like. All right, let me just show this here. So if this is the 1 hour time frame, so what I noticed that okay, even though we created this support early in the morning, like when you guys had buys, we had these buys and price closed above, and once you had this candle closing bullish, a support was formed. Then we had this bearish candle. This bearish candle didn't really close below the support, but it closed above the support. So this also means that this support is being respected, and I think this previous bearish candle was a booby trap candle, which kind of means that okay, this 1 hour is going to continue up to fill this wick and then up to your target right over here. So yeah, I think that's added confluence, and that kind of makes sense why price should continue moving bullish.
Yeah, I try to look for at least 3 to 4 confluences when entering a trade with a more higher aggressive stop loss, about more than 20 pips stop loss. So if I have all my confluences in there, then I would love to, maybe possibly hold that trade and use a higher stop loss.
Man, I think this is going to be a great move here because, like, on weekly, basically what happens is on Fridays, weekly candles, either they continue or they retrace, right? So if we are rejecting this area 135,400, then on the weekly should kind of like retrace and create this top wick, which it is right now. And I think, oh, no, it's going to continue moving up. Yeah, I agree with that. Even on the 4 hour here as well. If the 4 hours is going to close in 30 minutes, if it closes bullish, I think there's a very, very high possibility for the next 4 hour to continue moving up too.
So Roger, go to the monthly. So we got is this the last week in the month or next week?
Next week.
I don't even remember. Next week. So is it possible that you think we're gonna fill that wick?
Damn, that's a reach.
Yeah, that's a reach. Initially, what I was thinking was, when this month was, like when we were in the middle of the week, of the month here, I was looking at April here. April closed below 135. May closed below 135. June went all the way to 139 and closed below 135. So when this monthly candle was below 135, I was thinking that, okay, if it rejects 135, then we're going to continue moving down. But if this monthly candle stays above 135, then there's a very high chance maybe the next month, I mean, not next week, because next week we'll need to see like a 400 pip move, like it can happen. But if we stay above 135, we're going back up to 139. That's based on the candle. Like if this was on the 1 hour time frame, I would say, yeah, if the 1 hour closes above this level, there's a 100% chance we're moving up towards, well, not 100%, but like a very high probability we're going to go up to 139.
Okay.
So I think it's going to be a good test to see that based on, like, if we say the candles move the same way on all the time frames, I think this should kind of like work. And let's see if we draw fibs here. I don't know if I'm doing this right or not.
because I
Come on.
because I don't know if a lot of people know, but I used to use fibs. Like I'm slowly getting away from it because like I noticed that naked price action lines up a lot better, and I get my entries before my fib entries.
Yeah, I mean, like if you can get your confidence on price action, and if you draw your fibs and it matches up, that's where your confidence just gets even more stronger. Because now, like you're using an indicator or like a tool, in the charts to like complement your analysis. So like
Yeah, basically that's the thing. You cannot rely 100% on indicators. That's what I told you. RSI is good if you know how to use it. If you use it as a confluence, but don't trust RSI the entire time because you're gonna get busted. You
man,
need to know price action. Price action is key. If you don't know anything about price action, don't trade. Don't waste your money.
Man, there was this one guy I was talking to, and he was like, "Hey, I only trade on RSI and Fibs. I was very, very profitable, but I don't know what's going on right now." And I'm like, "Okay, let's take a look at the charts." This dude had Fibs drawn on the daily, the 4-hour, 1 hour, 30-minute, 15-minute. I'm like, "Man, what's this?" He's like, "Oh, I'm trying to find exact entries by using these." I'm like, why? I mean, does this make any sense? Like your chart is looking like 6-9, like with multiple rainbows on. Because when you draw fibs on like the daily and then you go down to the 4, all right, let me show you how it looks like, right? So let's say you have a 4-hour, you draw a fib like this. You're like, okay, from top to bottom, whatever. And then you have the 1 hour. You're doing the same thing from here to here, and then you go down to the actually no, then you go to the third. So like, you get my point, right? And it just looked so crazy. And this guy was finding levels down to, okay, let me just do this on the 30-minute right here and go to the 15-minute. Now going down to 15-minute, and we're drawing another level from, let's say, right over here. All right, right? So we're talking, right? We're talking, his chart looks like this, and he's like, all right, bro, so you see this one? This level is from the 30-minute chart, and this number here, this is on the 4-hour chart. So on the 15-minute fib, and I'm just sitting there watching, bro, what are you doing? I mean, so like that was the wrong way to use something that's profitable. And it's just, and then the dude got mad.
Now, the reason why that I slowly started getting away from fib is that I noticed that when I used to take my fib entries and I used to look at naked price action, like naked always came first before the fibs. You know what I mean? So when I started to understand and seeing like, okay, if I understand naked price action and support and resistance and how price react at those levels, I don't need to use my fibs anymore because I'm just getting that premium price. Versus I'm getting a little bit later move, and sometimes I get in a little bit earlier. But always like naked trumps over everything. Like when I started to understand that and to look at the charts more clearly and to like, it just stands out a lot more, you know what I mean? Like I still use my fibs. Like I could look right now and I could see a fib long and how to take my entry. But when I was using naked price action along with the fib for confirmation, like I was missing my moves. You know what I mean? Like I would get in a little bit later. But
yeah, I think if you just stick to just one thing, it will work for you 110%. Yeah. But it's just that you just need to really, really, really just stick to that one thing. Because I mean, I think like these, like all the different tools for trading, they were built by somebody who found them useful, right? I mean, they work. That's why they were built. Like your EMAs, SMAs, your harmonics, Fibonacci's, trend lines, price action. This is all built because they worked for somebody, and they said, okay, like if they're working for me, they might work for someone else too. But I think the problem comes in when someone, let's say, tries, let's pick this here. Let's say someone tries to trade with the Chaikin oscillator, right? So we got the Chaikin oscillator here. We don't know what this is, right? But for somebody who's trading based on Chaikin oscillator, they can read this very well, and they can say, okay, you know what, man, this actually works. You know, you retards here trading on price action, I don't know what you guys are doing, but the Chaikin oscillator, it 100% works. You know, and it's true, it might work for that, but the problem is when you have someone new coming in, you know, and they try Chaikin oscillator and they get, let's say, 1 or 2 good trades, but then when they take a loss, they're not thinking about that, okay, maybe this is a probability of having a loss. They're thinking about this Chaikin oscillator couldn't fail, and it has failed me. So now I gotta go out, and learn something new. All right, now I gotta go out and learn Bollinger Bands. You know, maybe this is gonna help me not to avoid losses. Now what's happening is now you're learning Bollinger Bands. You're saying that, okay, if price stays above this is basically a 10 EMA, right? Stays above this area, we should go through the top of the band. And then at the same time, you're looking at a Chaikin oscillator. You're like, yeah, but the Chaikin oscillator is saying down, right? And now you're confused. And now you see someone on Instagram using trend lines. You're like, all right, let me use trend lines here. Now you're using trend lines. Man, once you go this deep in education, you're going into a very slippery slope of destruction.
Well, let me tell you. So you see how your trend line. Hits right there, like, and that's why I say naked price action trumps up before everything. You know what I mean? Like, so when that candle is starting to break the top of that wick, that's when you will take the entry, because likely when it breaks the top of the candle, it's going to break the trend line. You know what I mean? So, but like I said, naked trumps over everything, because when I was using my fibs, my stop was a little bit long, a little bit bigger versus naked. It's a tighter stop. You know?
Yeah. Yeah, I know, it's true. Good God, sums up my last year of trading. Yeah, man. I think when people go through a lot of different ways to trade, I think you're maturing in the market, you know. But for some people it takes a long time. For some people it takes maybe a month, you know. And what I mean from that is, oh, what's this? Hello. Okay. Yeah. Let's mute Jay over here. And what I mean by that is, like, maturing basically means that you finally understand that, okay, like, all these things I'm doing, they're not working, so I have to change something. I have to maybe just stick to just one specific thing and just like stick to that. While others, it may take a long time because they can't accept that it can be really, really simple. You know, that's the whole problem. Like, when I first started, from the get-go, I saw trading was simple, but then I fell into this trap of, if I want to make more, or if I want to get, like, you know, those 100 pip trades, I need to learn more too. And that was not the case, because, you know, the more I learned, the more I lost. And that made no sense to me. I'm like, why? In school, you learn more, you get better grades, and then you can earn more and get a better job. But in trading, it's the opposite. You know, like, the more you learn, I mean, of course, you're going to have more knowledge, but you have to use that knowledge responsibly. You know, like, you have that responsibility that now you have a lot of knowledge, you have to really make sure you use it the correct way. Maybe not use it all at once. Some people are good at systematic trading, others are better at discretionary trading. Yeah, that's true.
Correct. And we're not telling you, if you're a profit trader and it works for you, like, albeit it works for you, you know what I mean? But just what Roger's saying, basically just simplify it. Whatever makes your trading more easy, stick to it and simplify it and exploit it. Because like I said, I was profitable with fibs, but I noticed that when I started trading naked price action, my win rate went a lot up and my stops got tighter. So I was taking smarter losses. You know what I mean? Like, I had my best months this year so far with combination of using fibs and naked price action. You know what I mean? But as I saw that I liked it naked a little bit more, then I started to gravitate towards that more. And it was just less stressful for me.
Yeah. Someone asked a really good question. What are your thoughts on randomness in the market? Randomness in the market is like being in a relationship with somebody, accepting their flaws. You know, when you have randomness in the market, you can't really explain that, because that's just random, and you need to be okay with it. You know, like, let's say if you have a perfect setup printed in front of you and you're like, okay, you know what, I've seen this happen a lot of times. You take the trade and just randomly it just goes the opposite way, you know, and then you're just like, well, you know, it's just it is what it is. You can't really change that aspect of the market. It's like, again, like, when you're with somebody and you're just accepting their one flaw which you just hate, and you're just accepting, you're like, it is what it is. But in the overall perspective, like, it works out very well. So like, if you look on GJ right here, if GJ, this candle would have closed bullish here, we could have seen that, okay, that gave us more confirmation for price to continue moving up. But since it's coming down, and if this candle closes like a weak bullish candle, or even if it closes below this bearish candle, then you could say, okay, well, that was pretty random. I mean, price is just consolidating now at the time when there should be volume in the market because we have NY open. So at that point you look at it and say, well, it is what it is. Can't really explain it. There should be volume, there's no volume, you just gotta accept it.
Correct.
The best thing about learning is that you feel like your broker is watching your movements. Yeah, that's something I've felt like for a long time, that broker is watching my movement. It was mainly because I was reading a lot of things on the internet, like they can watch your stops and they can like stop you out, and the only reason I was getting stopped out because I was taking bad trades, man. That was it. I was taking bad trades and I was saying, oh, it's a stop hunt. I never thought about what about the person who's in the winning trade? Like if price is at a support and I'm taking a buy and price is dropping, I'm calling that a stop hunt. But there's a guy who's in sells and he's trailing his stops. What about him? Why isn't the market stopping him out? So I thought about that and I'm like, yeah, this makes no sense at all. There are no such things as stop hunts. You can argue with me all you want. I'm just say it right here. Some people believe
I wouldn't say like the market is out to get. I would say liquidity grab. Like stop hunts are like liquidity grab. Like if the market wants to go higher, it has to push down. If it wants to go lower, it has to push up, like to grab liquidity. So I think in that aspect, that's what they consider stop hunts, but it's not necessarily like the market's out to get you. It's just that the market in either direction, just if you look at the 4-hour time frame, perfect example, like each time GJ wanted to go lower, it pushed up on the 4-hour. So it grabbed liquidity to the closest, like that where Roger has his candle. It came up to that resistance, somewhere in that area, then it continued to drop. You know what I mean? So that's where you have to use your smaller time frames to find out how you're going to get those entries. But anytime the market wants to go in either direction, it has to grab liquidity to continue. It's just not going to continue to drop. It has to grab liquidity. So I think that's the aspect where they think the market is trying to stop them out or stop hunts, but they don't understand that the market doesn't go in one direction. It has to move. It has to continue to move higher to go lower, or go lower to move higher. It has to grab liquidity. Just like if you're driving across state, like you have to stop at a gas station. You can't continue to drive forever. So when the market makes those stops, it's gassing up to continue to go in the direction that it wants to. So once you understand that basic concept, then you understand that the market's not trying to get you or stop hunts.
Let me add something, Kev. That's why it's like for anyone that's starting in FX, it's good to know the sessions, what timings, what volume pushes are, things like that. That actually helps a lot. And if you could like track those down, like if it's gonna be a bullish run, if it's gonna be a bearish run, according to whatever trend is going, that actually works so much.
Correct. So those buys that we took today at 135, 515 that everybody took today, that's what's around like New York opening, right? So you should expect like an hour before that the market's gonna push, because then liquidity is coming in the market.
Right, so, at 8 a.m. Correct.
Yeah. So you're gonna get that push. So once you find your spot, you just have to wait on the market to take you to the next level.
Correct. And most of the time, like you believe it or not, when volume pushes in, if it's either New York open or let's say NYSE open, the market's gonna go about half the time, probably more than half the time, the opposite direction for some reason. So always take that in consideration. Sometimes it could push with the trend. Sometimes it could just go ahead and reverse. So I rather wait for at least like a 15-minute candle for confirmation and then get my entry in. But like right now, what it did is it just got stuck in the range. So that's where it becomes difficult.
Yeah.
Any tips on how to follow through a trade plan? For example, when price comes close to break even and my fear comes in and decide to close early, but in the end the price is exactly what I planned before. Yeah, just close maybe 90% of position. Whenever you're afraid, just take most of the risk off and let the rest running, because then that way you're gonna build your confidence. No, I didn't take any trades today. It's Friday. Friday normally, Fridays are normally discussion days. Sometimes we have guests on. We had guests on today, Roy. So Fridays are pretty chill days.
And also for all those newbies traders that's out there, please don't trade on Sundays. Like Sundays is a no trading day. Anyone that try to trade Asian session on Sundays is crazy. The market's still setting up, so
Yeah, the daily candles are opening. They're trying to set up for the week. The weekly candle is starting as well, so it gets a little difficult.
Yeah. So if you're trying out something new and you're trying on a Sunday and you're like, oh, this thing's never working, that's the reason why. And also like low volatility is like Asian session, like the market doesn't tend to move great in those sessions right there. So if it breaks like a support or resistance or come and approach it like, and you're thinking that it should do one thing, like it's not going to do it because there's no volatility to take it to the next level, So that's why you see like people always say Asian session is the worst session to trade because like it's hard to get winning trades in an Asian session because the market, instead of like, for example, like we aim for 10 pips. So in an Asian session, you can't aim for 10 pips. You know what I mean? One or two times you might get those Asian push when at around 8 o'clock when a little bit more volatility comes in, but you don't see it a lot. So try to trade a better session.
Oh, just wait for Monday.
Yeah, last Sunday was epic. I wouldn't know about last Sunday. I don't look at the market on Sundays. Some Sundays are gonna be okay, but like it's not gonna be all Sundays. When is the best time to trade? The best time to trade, honest to be with that London. London is a good time to trade. There's a lot of volatility in the market in London opening.
Oh, best day to trade.
Oh, best day. In my opinion, Monday's okay, but Tuesday through Thursday is kind of that sweet spot because the market's already set up already, so the market already knows what direction it wants to go in. But Tuesday through Thursday is a sweet spot. Fridays, we say it's Freaky Fridays. Sometimes the market doesn't move well on Fridays. Sometimes you'll get a big move. Likely when we get off the stream, the market's going to do something crazy. And you're like, oh, you know what I mean? But like Tuesday through Thursday is most of the sweet spots.
Yeah, I like that too. Tuesday, Wednesday, Thursday, awesome days.
Yeah.
Mm-hmm.
Tuesday, my favorite.
Wednesday used to be the worst day for me because mostly on Wednesdays, price would trend, right? And when price would trend on Wednesdays, I try to call tops and bottoms, because I didn't know how to trade the trend. Like, let's say if you look at gold, right? And gold just starts to trend. And if gold is trending, I'd be looking at, okay, we've reached a resistance, try to sell, boom, lost. Okay, let's look for another resistance. Look for another resistance, take a sell, boom, got stopped out because it went up, So on Wednesdays, that was my biggest issue. And I really had to look to see that, okay, why was I losing on Wednesday? And the only reason I was losing on Wednesday was because I was trying to call the top or I was trying to call the bottom because I didn't know how to trade the trend. And then I started to see that, okay, what can I see in the candles that could tell me how to trade the trend? Because, sometimes when price is trending, you don't have anything here to the left. You don't know where's the next zone is. So then it gets really hard to trade the trend. And at that point, I just had to put my trust in the candles. That, okay, like, you know what, if price is moving, let's say 30 pips per candle, I think from that one candle, I can get like 10, 15 pips out of it. So that became my goal when it came to trading the trend. Wu-Tang Clan. I strongly disagree with this. Yes, Tuesday. Thursday has bigger moves. However, if you stick to your strategy and discipline, you can trade any day. Yes, that's also true.
You think we might be getting a push at 9:30 for DJ?
Yeah,
Which
when
way?
the equity markets open.
No,
Which
yeah.
way? Which way?
I think we should be going up.
It's hard to say right now because right now, well, we're at that back into that range right here. So it depends on where price closed within the next 10 minutes. You know what I mean?
Right.
And like how Roger looks for you, like how to look for confirmation. So if we break that bottom wick at price close below this level, you could drop that. Since that wick is so long, you could drop down to your 15-minute chart, and you could wait for the 15-minute on the 15-minute time frame for that to break that bottom wick.
Why are you kidding me? Like,
You're on buys, right, Mac?
why are you always doing this? Like a cyber bully, bro? Oh yeah, I'll be waiting for buys. So
No, he said
No, you're on buys right now.
no, I'm not.
Sorry.
I could send you my terminal. I could send you everything you want.
That's okay.
Yes. So it could possibly see Roger got that bottom box, that gray price could, with that volatility that Mac's talking about coming in at 9:30, price could possibly push to there. But you know what I mean? It's a Friday, so who knows what's gonna happen.
Yeah, I'm probably done for the day. Who knows? Psych. Jokes.
Fridays, I only do one trade, and then that's really it.
Yeah, I did a sales at first at 6 a.m. and didn't work out. I closed early, and then I took buys up to 0.620.
Got it. Yeah, I was in a sell also. Picked up like literally 9 pips. Thank God I secured something at like 9 pips because price came all the way right back to entry. It was on the 30-minute on GJ.
Yeah, I saw it.
Yeah,
Like
I did the same thing also.
It looked like it was at the bottom.
Ambidex, you're from Miami, right?
Current, I met you, and you know what's crazy?
I was
You put
thinking,
me
oh
on
man,
to
I know this guy.
The Coral Gables pizza spot. Oh my God, I go there probably at least like once a week. That place has the best pizza.
Oh,
For real?
gotcha.
We're in Coral Gables.
Ponce,
I think it's
Ponce
called
and
like
Miracle Mile?
Ponce de Lon. It's called like
Oh,
or something
by
like
Miracle
that.
Mile.
Yeah, nearby. Ponce
By-
and 23rd. That's
That's right.
Spritz.
Miracle Mile. You pass Miracle Mile, and I think like around there.
Yeah, it's a Spritz. It's Spritz's Pizzeria. It's
Oh, yeah.
Italian place. It's
Yeah.
with pizza rustica.
Oh yeah.
Yo,
It's like a
they got
square
the-
pizza.
They got the best pizza. They don't even use like pepperoni. They use like some type of genuine spicy salami.
Yeah.
Whoever owned that pizza shop, they're gonna see an influx in business soon.
Right?
Yeah, there are a bunch of guys asking
Roger.
in the gulag about the name of the pizza shop.
Roger, we gotta edit that part, man, and call the owner up and let him know that he needs to send some cash over.
Yeah, what's the name
He's
of
my
that
cousin,
place?
so yeah, you're good.
Oh, okay.
Spritz. It's called Spritz Pizza.
Yeah, it's a Spritz.
Cole Spritz.
No, Spritz. No, it's called Spritz. SPRITZ, I think.
Yeah, Spritz. Well, you gotta put like Spritz Pizza Coral Gables and it'll pop up probably.
No, not
Oh,
Cole,
that's
man.
it right there.
Not Cole.
Yeah, that one right there.
And they got great reviews, man.
Yeah,
Their
Cross, it's
food
really
is
good,
like
man.
amazing.
Ooh, now franchising. Oh, okay.
there you go.
Is this the
It's
same one you brought to the
Yep.
boot
Yeah.
camp?
Yeah, but I mean, this is the main the main chain. The owner of this plate, if you can see here, the last letter of the spread, it's not an S, it's a Z.
Yeah.
Because basically the owner of the main chain wanted a lot of money for that name for spread, so he changed the S to a Z, and now he's Gucci. Now he owns his own thing.
He finessed him.
Yeah, he finessed
Yeah.
basically.
And Spritz sounds like a spritzer drink, like a Sprite.
Exactly. Yes. Yeah.
So yeah, Spritz sounds better.
Right there.
Oh, I've
You know
seen
what?
this.
Good also for sushi, all you can eat in Coral Gables. Oh man, that place in Miracle Mile. It's all you can eat sushi.
Oh, that's POC. POC.
Yeah, that one.
Don't get excited, man.
Yeah, bro, it's just sushi.
No, but it's all,
my God.
all you can eat sushi.
Yeah, it's really good. POC is really good.
This is Miami for those who haven't been to Miami.
Yeah, that's Coral Gables. It's
Yeah,
a nice
it's
city.
Coral Gables.
This is where 90% of the OnlyFans page is made.
No,
Yo, they're
All right, let's look at the
downtown a
buildings.
lot,
Let's look at
too.
the buildings over here.
that would be Hialeah. Go to Miracle Mile.
Oh, DJ's flowing back up.
Yeah, it's going to close in 3 minutes.
Gonna pick up.
All right, guys, got to go. Have a good one. Don't forget to pick up your MF swag.
Yeah, man.
Oh, bye,
Oh,
Sash.
right. Thank you.
Yeah,
Thank you.
guys.
Hopefully.
Enjoy your weekend.
Yo, speaking of that, Raj, I have the funniest story to tell you. So I'm at the mall one time in Miami, Aventura Mall. It's like the biggest mall down here aside from Sawgrass. And I was wearing the market fluidity shirt from the boot camp. And the guy goes, yo, do you work with Raja? How can I get a job with you?
No, wait.
Yo,
At
you work with Raja.
At Aventura?
Yeah, Aventura Mall.
No.
I'm like walking. I forgot what store I was going to. I think it was Bloomingdale's or something like that. And the guy's like, "Yo, do you work with Raja? Like, how can I get a job?"
You work for him. You work for him. How much you getting paid?
We're paying you in pips.
That's dope, man. Like he'll be recognized in Miami.
Yeah,
That's
people
dope.
recognize the brand. I still wear my market fluidity shirt. You know, it's a nice black shirt. Why not?
Yeah, it's a nice shirt. Do you hang dry them?
Say that one more time.
Like, do
Send
you
it to
hang?
the dry clean. I send it to the dry clean.
Yeah,
That's a limited edition shirt right there.
yeah,
I'm
yeah.
not
that's
even
so-
joking.
I made the mistake with mine. I put that shit in the dryer and it shrunk.
And it
you know?
shrunk.
Yeah.
Yeah, I had a feeling that was gonna happen. So I just sent it to the dry cleaners.
Yeah, yeah, that's good. So after that happened, I sent all my shirts to like I hang dry them.
You know, talking about that, I'm still waiting for my T-shirt from the Miami Bootcamp, Raja.
Oh yeah, okay. I'll send you one for the Miami one and the London one.
All right.
Oh, and Kerwin, thank you for buying my shirt. I'm a little
Oh
bugger.
man, you're welcome, buddy. Hope you enjoy it. I mean, I hope that these T-shirts are gonna be like next week.
And I'm gonna have my mom.
How long
watch
it takes from Canada to
New York?
Maybe
Oh,
3-4
probably
days.
Like, my magic keys took like a week tops.
Okay.
But that was before Corona.
No, that was
After
Corona.
Corona.
Oh, okay.
Man,
Look.
Like it's weird because like sometimes post it takes like a week. Sometimes it's taking a month. It's
wow.
just yeah, it's just crazy. I don't know what's going on in some things at customs or what's happening, but man, some things are taking just way too long.
Oh, okay.
Yeah, at
Yeah,
times I
man.
get these. Yeah, at times I get these angry emails saying that, why can't you make the post go faster? I'm like, all right, let me go find the postman and let me tell him to go faster. I mean, I can't do anything about that, man.
Roger, you should have the option to charge them extra for overnight shipping.
Yeah, that's going to be way expensive. Like, I tried sending overnight to UAE. That cost me $100.
Wow.
Yeah, so it wasn't even, like it's not cost effective at the end of the day.
A lot of Karens out there too, so you gotta be careful.
Can we release the pink hat for the ladies? Oh, yes. We'll have to talk to Satya.
FX Dog?
Yeah, we'll have to talk to FX Dog about that.
Oh, that's a nice idea.
Probably, yeah, pink ones. Probably pink and purple.
Took the color right out of my mouth.
Yeah. Give the customer the option to buy that expedited shipping. You'd be surprised at how many people are willing to pay. Okay, we'll see.
That is true.
Yeah, that is actually true. Cause I thought about that and I was like, man, like expedited to the US, that's like 50% cost of the product itself. So in my mind, it didn't make any sense because if I saw that, I don't know, maybe someone would. That's true, Pete. You have a really good point.
Because we know you're a penny pincher.
Oh man, I pinch pennies
Trust
to the max.
Some of us don't care.
Bro, I pinch pennies so much. If I'm gonna go buy a shirt, I'm gonna buy 4 of the same kind so that I don't have to spend gas to go back to buy new shirts.
But that's the way the wealthy think, though. You know, I think I was reading something on. I think it was the kid that owns Facebook or Bill Gates. Something like he wears the same shirt so he don't have to think what shirt to pick in the morning. So that way he doesn't waste his valuable time. You know what I mean?
Yeah, because
that was Mark Zuckerberg.
Okay.
Oh. Yeah, because the way how I see it is like if in the morning, like let's say in the morning during the live streams, right? Before I start the live streams, if I had to, so I wore this shirt yesterday to the gym, and then I wore this shirt like this morning too, someone's calling me dirtbag, whatever. But like, I feel like it's a waste of time for me to wake up and decide what I'm gonna wear for the live stream today. And during that time, I could go downstairs, drink water, turn on my computer, turn on the charts, look to see what's happening, or I could spend time choosing what I'm gonna wear for the live stream so I could look good. I think it just beats the purpose of starting for what the purpose is to give knowledge and whatever.
I think that's also called decision fatigue.
Oh,
you don't want to have that in the morning.
Decision fatigue.
But you know what I noticed on you, Raja? That you can ask for better prices on anything other than mangoes or bananas. You never ask for better price on bananas or mangoes. No matter what price is that, man, you're gonna get it.
Yeah. Now we're getting mangoes on a discount because we're buying them by the bulk.
Nice. For your brother?
Yeah, my brother, I buy
man.
I buy 2 cases, and my brother one day he called me. He's like, "Hey, I have 35 cases of mangoes. Do you want some?" I'm like, "You got 35 mangoes or cases?" He's like, "Cases."
I saw his car. The entire car was full of boxes with mangoes. I mean,
I thought that too. I'm like, what the heck? He's reselling mangoes.
Yeah. So that's what he did. He resold those mangoes.
Smart man.
Yeah.
But those mangoes are from Pakistan or from India?
Pakistan.
Okay, because I found a company here. They sell Indian mangoes.
Oh, if you compare Indian mangoes with Pakistani mangoes. Now, I'm not trying to like, roast mangoes or whatever, but but what you're gonna find is you're gonna find that the Indian mangoes are gonna be smaller and much more weaker and just not good looking at all. And if you look at the Pakistani mangoes, they're like big and juicy and yellow and just perfect.
Okay.
Yeah, bro. Which is why they're expensive too. Oof.
Yeah, 7 mangoes, $40, man. That's a lot.
Yeah. Oh wow. UG has been dropping over here, coming right down to the swing.
Yeah, and gold is trading about the 1900s, so it's gonna be a nice push.
Wow.
Yeah.
We tapped 1900.
Yeah, it's incredible.
Incredible, man. Who would have thought?
Yeah.
Who
You
would
know
have
what?
thought?
I'm gonna buy gold.
Well,
But like a few days ago, I remember Uncle Ted pretty much saying that gold had like a lot of clear traffic to just like kind of just keep on moving.
Yeah.
It was like there was nothing on the other side to really combat it.
Yeah. Like right now, I mean, there's nothing that's gonna stop gold from 1900 to probably 1910.
man,
So
it was 3 days ago when price came into 1830s, and we're like, okay, price is reaching the gulag where price will kind of like reject because it rejected before. It was unprecedented. Like this move in the last 2 days, this was an unprecedented move. Like, look at this, man.
okay, I'm close.
$40 in 2 days, $80 in 4 days. Wow.
Wow. Yeah, actually, I took the first buy in like I said, like in maybe 3-4 months already in gold, and it was like 3-4 pips to spread. So I'm like, yeah.
Like, bro, in 10 minutes, this thing has moved 85 pips.
Yeah, I saw that.
I took a small buy just for fun, because I mean, when price react to these key levels, I mean, it's a non-stop.
900.
Right now, I'm 30 pips in profit on gold.
Wow, that's good. I wasn't even looking.
I'm gonna close. That's easy.
I'm actually looking at indices right now on Nasdaq to see if we could get a pop up at 930, but it's highly unlikely since it's been consolidating for like the last.
Oh wow! Look at this.
Wow, mangoes and Lamborghini.
Pakistani stores Lamborghini mango delivery service. Drive sales. Can you imagine?
No wonder they are so expensive. They had to pay for the Lamborghini.
Bro, dude bought a Lamborghini by selling mangoes.
Oh my God.
You got people buying Lamborghinis, selling courses, or doing other stuff. Man, this dude's buying Lambo by selling mangoes. Crazy. But whoever is holding gold and making a bunch of money, man, I salute to you. That's amazing. I mean, this is just incredible the way gold has moved. Gold is like the headless monster. It just keeps on running.
And it's gonna continue. Man.
Like some guys have been calling shorts on gold, and I'm like, man, no, gold and GJ, these are two pairs, and US30. Once they trend, they don't care about your mom, your dad, your aunt, who you are, where you're from. They don't give a shit. They just do what they do best, and that's running. Yeah. Like Speedy Gonzalez, like.
Wow, that was actually a good 15-minute right there. Yeah. Jesus.
Can you look at wheat? Yeah, let's take a look at wheat over here. Wheat.
Gold versus the euro. Wow.
Wheat is consolidating. Looks like no one's making any buns anymore or something. It's just consolidating. See, the airlines aren't using any bread, so that's really making price consolidate for wheat. So once that demand goes up, cruise ships start going, like, work again, then you'll see price of wheat is going to go up again.
Remember the talking options girl? She was buying corn.
Yeah, I don't know what was going on there,
Yeah.
but there have been requests to have that back on. So we're going to see if we can.
Man, that's gonna
Seriously?
No,
Yeah.
he's joking.
Yeah.
For real? They want her back?
Yeah, we might make that happen soon, so we'll see what happens.
Wakes don't lie. Okay. See how 9:30 turns out, but other than that, I'm not looking for any other trades.
All right, guys, I'm going to head off here. Everyone have a great weekend.
Be safe. Take care. Enjoy your weekend with your
Have a good weekend, you guys.
Don't overtrade.
Have a great weekend.
Yes,
No,
sir.
don't overtrade. Yes, that's right.
Yeah, close your charts and see you guys on Monday. Bye bye.
Be safe, stay strong.
All right. See you
Have
guys
a nice
Monday.
weekend. Shukriya, Raja.
Kervin looks so fair today.
Let me see, Kerwin. Oh wow! Look how clean. I'm about to go get a haircut too. Look at this.
You put some fair and lovely cream on or what?
Yeah, I got rid of my beard.
Little foundation going on over there.
Oh.
He's going drag queen.
Oh, come on.
Come on.
That was funny.
All right, bye guys.